Nasdaq futures pointing to build on those gains by about 0.1%. Euro dollar currently gaining 0.2%, so a little bit of strength coming through for the single currency. 433 on your 10-year after yields got to those 2007 levels. And crude WTI $80 a barrel now, again at 0.2%, so above $80. Is there further upside for oil on the back of a little bit more optimism around the commodity space? That is the cross-asset look. We'll switch over to futures now. About 20 seconds from the open, you have a positive catalyst coming through from the Asian session as well. A turnaround in sentiment on mainland China and in Hong Kong. DAX futures pointed to gains of 0.6%. There's autos that led the sectors yesterday. FTSE 100 futures pointed to upside of 0.3%. And positive as well for the CAC Garonne. Gains of 43 points is what the futures are suggesting. Let's let the pricing filter through then this Tuesday morning at the open. We'll zero in on the UK, of course. The FTSE 100 currently flat. Sophia Horta-Costa has been talking about the fact that maybe sentiment potentially could churn. There is that valuation gap in terms of some of the industry heavyweights listed on the FTSE 100, but there is also the concern about the linkages with China as well. The FTSE 100 now up 0.2%, so we'll see if it snaps that 7 straight days of losses for the main index here in the UK. The Spanish IBEX getting 0.5%, and over in France, the CAC Garonne posting 30 points so far in the session, again at 0.4%. The German DAX up 0.5% at 15,680. Let's flip it over onto the sectors. It was autos that led the gains yesterday, and there were very modest gains across the European sectors session, and it was real estate that led to the losses. Losses of more than 1% on real estate. A high yield environment, of course, challenging for that sector. Technology is gaining 1%. The lift again coming through from the US session, where the Nasdaq ended up about 1.6%. The optimism related to ARM and also expectations, as I've said, around NVIDIA. Basic resources gaining 1%. Energy is down though, or at least flat. Food currently up 0.2%. So broadly positive across these main sectors. Jumping out for me right now, technology, basic resources, the biggest gain is coming through for those sectors. Industrials also doing relatively well, gaining 0.6%, but energy is flat. Let's bring Sophia Horta-Costa in now then from our Markets Today blog, and we were discussing there the linkages then, Sophia, between China, the downside there, the concerns about China and some of the big cap companies listed in the UK. But you've had a stronger fix today as well, and more attempts by authorities, Sophia, to try and at least slow down the depreciation of the currency, of the yuan. Tie that into the broader market moves that we'd be seeing in Chinese markets.
Yeah, Tom, the PBOC likes to use this word disorderly depreciation. So clearly it considers this current pace of losses in the currency to be too disorderly for its liking. So really pushing back in offshore market. This is what the PBOC does to essentially squeeze those bearish speculators. How does this feed across to the global market? I think you have to look at this from a kind of bond sell-off story. Why is the yuan weakening? It's not just because people think the Chinese economy is weak, but there's also the interest rate differentials. China is kind of the only major economy in the world that's still throwing stimulus at its economy. Yields there are heading lower. That's very, very different to the kind of trend, the higher for longer trend that we're seeing pick up in markets globally ahead of that key Jackson Hole speech from Jay Powell on Friday. You did see Japan, yields in Japan, as you mentioned, Tom, ticking up. US yields, that's the kind of the key one for China. If that gap widens, which is exactly what's happening now, then it doesn't make sense for foreigners to essentially hold yuan-denominated assets. You're seeing outflows from onshore markets, and you're seeing the yuan depreciate on the back of that. I think that's a very important story to look at.
So the next steps of the Fed really consequential for China then in terms of the assets as well. 433 to your point on the US 10-year, 433, and we saw yields, as we've been saying, the headlines up to 2007 levels yesterday. The sell-off becoming more pronounced, it seems, across treasuries, though things have steadied in the session today. What is your take in terms of the sell-off? We still have the likes of Fidelity saying, look, still go long, there's an opportunity. HSBC, Stephen Major saying this is a good buying opportunity. How are markets adjusting to this higher yield environment?
I love that quote from Fidelity in that story by Ruth Carson. Everyone should read it, which is the 101 of bond investing is that you should buy treasuries when real yields are positive. You know, I think that's a really important thing to note, because this is the kind of environment that many bond traders, young bond traders, have never seen before, right? I mean, this is the highest real yields since the global financial crisis. So I do think there's kind of, should we rip up the playbook of the past decade? There's questions around that. Higher for longer, is that positive for risk assets or not? I still think there's some questions around that. You're seeing, you know, the NASDAQ had an incredibly good positive day yesterday. And even though risk assets were completely rocked by this higher for longer narrative last week, because it's meant to be bad for tech, it's meant to be bad for growth stocks. So where is the market going to land on that front? I think that will be very interesting going forward. And also here for the UK, is higher for longer going to be stickier here? I think that's one thing that the Markets Today blog is looking at, because the UK has its structural issues. Inflation is stickier than thought, wage growth is higher than thought. Andrew Bailey and his team have a very difficult task at hand at fighting those inflationary pressures, and also the economy is weak. Even though that GDP print that we had was better than expected, it's still a kind of a stagnating economy. That's not what's happening in the US. So again, the question for assets here in the UK is that going to derail the recovery story? FTSE 100 open higher, so I'm glad to say that that 7-day losing streak looks like to be broken.
Yeah, as you flagged for us, the FTSE 100 currently up 0.2%, just getting 14 points, but still a bit of an outlier in terms of the other major indexes, still not performing as well as the indexes over in Germany and France, for example, but at 7,271. And to your point on yield differential, the UK 10-year, the gilt, is at 472, so it's about a 40 basis point higher in terms of the yield versus its US counterpart. And then the context, of course, of the weakness in this UK economy. Sophia Horta-Acosta, thank you very much indeed. Let's get some of the individual stocks on the move. By the way, you can get more from Sophia and the wonderful Markets Today team on the UK website or by typing TLive Go. Onto the terminal, talking wonderful people. Joe Easton is here. Joe, some stocks on the move for us this morning.
What an intro, thank you, Tom. So John Wood is gaining around 3%. You had the CEO on the show earlier, and the main takeaway there seems to be that they could soon restart dividends. We had the collapse takeover by Apollo, so that stock is coming up from a low base, but ticking up around 3.3%. Then Ubisoft over in France seems to be the big beneficiary in Europe of the news that the Activision takeover by Microsoft is being re-evaluated by the UK authorities who previously vetoed that on competition concerns. Ubisoft getting the rights to Call of Duty and all of the other popular games from Activision, and that one up 5%, almost a big mover over in France. SBB downgraded their ratings 5 levels by Fitch, another negative news for the Swedish real estate company. That stock slumped yesterday as well on news of a CFO change at the company. I actually learned how to pronounce that before the market opened today, but I've lost my nerve now and I'm not going to attempt, so we'll call it SBB. That one down another 4% today. Then Adyen, it's a miracle, 7 days of declines finally ending. That stock lost half of its value over the past week, given that massive profit warning we saw the back end of last week. There was already weakness coming into that report, but finally getting a gain, up almost 3%, but still a very long way back for that stock over in Amsterdam. Then we're going to flip over and look at these mining stocks. BHP coming down around 0.5% at the moment, 0.5%. Rio holding up some of that bad news priced into that stock. They already did cut their guidance recently. And then not too much movement in Leonardo and Solvay, the two firms implicated in that investigation by the Italian government into the CEO of Leonardo. They declined to comment on that. Those stocks holding up at the moment. Then over to my favourite board, the ratings changes, and we are seeing the best performing stocks today. I'll start down the bottom with Hays, because that was one of the best performers on the Stock 600. We also have Adecco, both of those stocks upgraded at Exane being Paribas and are outperforming. Citi, a new buy over for CRH, they put a new buy on that one. And JDE Peet, the coffee company, downgraded over at ING, down 2%, trades well below the IPO price and falling even further.
Okay, Joe Easton from our Exeter team, thank you very much. Coming up, we're going to take a look at why JP Morgan thinks earnings estimates might be too high to be true. More on that next. This is Bloomberg.
Solar energy, wind power, battery-operated cars. The transition from old to new energy forms has investors placing bets on which technologies will come out on top. Bruce Flatt's Brookfield Asset Management sees what it calls massive opportunities. Its new impact fund raised more than $15 billion, and Flatt says it could have raised more. The fund has two targets: companies that need to dramatically curb greenhouse gas emissions, like power providers, and those that are in a position to dominate in clean energy. Brookfield hired former Bank of England Governor Mark Carney to strengthen its environmental, social, and governance investing. In March, Australian utility AGL Energy shot down Brookfield's takeover offer. The firm had aimed to accelerate AGL's transition to net zero emissions by over a decade. Carney signaled that this was no problem. He says Brookfield is reviewing at least 50 potential transactions across a range of industries.
Bloomberg UK, your source for news and analysis covering the biggest challenges facing the UK government, economy, financial services and markets.
Tax cuts should not be the priority. It's about a credible plan for growth over the next 2-3 years.
In this post-Brexit world, how do you see actually servicing your clients?
It was disruptive, and it's going to have implications to how capital raising works.
Now we're having the perfect storm in the UK.
Watch Francine Lacqua Thursdays at 9:30 a.m. only on Bloomberg, your global business authority.
This is Markets Today. Happy Tuesday, 11 minutes into the trading session. Gains of 0.6% across the benchmark. The FTSE 100 breaking, at least for now, snapping 7 straight days of declines, gaining 0.3% at 7,277. Let's focus on tech and one of the big deals that has been in focus for all of us. Microsoft's $69 billion Activision Blizzard acquisition got a new chance at winning approval from UK regulators after the tech giant submitted a substantially different deal to the country's antitrust watchdog, the CMA. Let's get into the details then with Bloomberg's Alex Webb. Alex, what do we know about the reshaping of this deal?
So what Microsoft is now offering is the licensing of its cloud gaming offerings, of Activision Blizzard's cloud gaming offerings, to Ubisoft, a big competitor in the space. The thing to remember here is that the objections from the UK were very different from those both in the US, which were ultimately rejected. The deal was cleared in the US because they focused on that cloud gaming piece. In the US, it was about just whether Microsoft might think about, say, pulling Call of Duty from other platforms. Microsoft, of course, owns the Xbox platform, whether it would stop that going going on to Sony. The regulators or the judges there decided that actually that was unrealistic. It was not a competitive threat. In Europe, in the UK specifically, it has been about cloud gaming. Could Microsoft get a dominant position? It's offered now a concession that is aimed at least at reducing some of those concerns.
Okay, Bloomberg's Alex Webb on the reshaping, the restructuring of this Microsoft deal and whether or not it will appease the CMA. Thank you. Let's bring in now Patrick Armstrong, CIO of Plurimi Wealth, who owns both Microsoft and Activision, on expectations, presumably, Patrick, that the deal will get across the line. This seems to be good news for you. Your reaction?
Yeah, I'm happy with Activision. It's looking very likely now. I don't think this is just a shot in the dark. I think they've been in discussions with the regulator, and this will get it across the line. Every other region's approved it now. So, yeah, should be getting the $95 in cash for my Activision shares, and I think it's going to be accretive for Microsoft. It would have been nice if they could have kept the gaming, the cloud revenues, but they've probably sold that at a discount, but it's worth it to get the deal.
Do you take the profit once the deal's done?
On Activision?
Yeah.
Well, yeah, it depends where it's trading. If it's trading at 94 and change, I might trim it. But if it's below 94, I'll just wait. I don't think it'll be long now, and probably get the proceeds in October.
And Microsoft, the multiples, I mean, you talked about the fact that multiples across big tech are looking stretched. You hold that position in Microsoft, or do you want to be reallocating that cash as well? I'm
continuing to hold it. It's not one that's screaming value, but it's got its dominant market positions moving into gaming. It's delivering growth in cloud. So an expensive company. I think the multiple's warranted. I don't think you can hope for any multiple expansion from here. It's got to really be driven by improving cash flows, improving earnings, top line growth from here, rather than the multiple expansion that's really driving markets this year.
Well, to that point, and stepping back a little bit, to the point made by Marko Kolanovic in his most recent note, of course, of JP Morgan, saying that, look, these double-digit earnings forecasts for next year are just disconnected from fundamentals. He's concerned about the consumer. He's concerned about this higher rates for longer environment. Do you agree with that view?
I agree with it, and it's almost all the time. Consensus estimates are 7 to 10% too high to what's achieved, and as in you get into the quarter before a company's report, estimates are guided down to a level that are just below levels that they're going to deliver on, and then companies beat. But whenever you look at estimates 12 months out, 24 months out, those are almost always uniformly too optimistic. It's just humans are naturally optimistic. Companies are optimistic in their prospects. They pass that to the analysts, and then they get revised down. So I don't know if that's necessarily going to be a headwind, because that's a pretty normal environment where earnings just do get revised lower.
And of course, there's scrutiny of margins in the earnings, and that ties to what's happening with the Fed and the impact of higher rates. Yeah. Does Jay Powell take a victory lap in terms of the soft landing on Friday?
I think he should, yeah. He should be patting himself on the back. This time last year, it looked like he had to choose recession or letting inflation remain persistent, and he's got inflation down, not to his targets, but pretty comfortable levels, and avoided the recession so far.
How are you articulating your view that rates are going to be held higher for longer? I think you've got about a 6-month view. Where does that leave you in terms of your views around corporate debt, around some of the credit that we're seeing
You're
available?
being compensated to be at the front end of the curve. So I like investment grade corporate bonds. The yield curve's still inverted. You're being compensated by being short duration. I think the long end may drift a little bit higher, and we're going to get towards a flat as a pancake curve eventually, I think, where the Fed's probably sitting on its hands. Rates are going to stay 5% for an extended period, and 10-year yields start coming up towards those levels, because 4.3, 4.4 seems pretty high from where we were, but it's pretty normal. If you've got inflation expectations at 2.3, that's where the 10-year should be. If inflation does come unhinged, you'll see higher 10-year yields, but if that 2.3 means the Fed's doing its job, that's where markets are pricing right now. Probably the 10-year yield can remain around these levels.
Which equities are looking most attractive then in this kind of higher yield environment? You flag for us healthcare, and you also, I think, as well, have a bit of a play around commodity. We've seen the energy pick up, Brent is up as well. Talk to us about the opportunities in equities.
Yeah, I think you want to buy the laggards right now. Just the techs really run hard through the first 7 months anyway, August being a bit weak. But companies that haven't participated are healthcare. I love Novo Nordisk. It's our biggest position. Eli Lilly, obesity, diabetes, that's the new pandemic. So these companies really have dominant market shares, have growth. They have vanity products that may turn even into insurable products, because the weight loss drugs are showing signs that they reduce heart attacks and stroke risk. So maybe you get a bigger market from those kind of companies.
From vanity to healthcare. What about the commodity space then? How do you stay constructive on energy when China is performing so badly?
The thing is, there's more oil being consumed today than ever before. by the time we get to the end of this year, even with weak growth from China, China's going to be consuming more oil at year end than they are right now because their economy isn't collapsing. It's just not growing anywhere near as well as we hoped or what we thought it would do. But it's going to grow at 4% this year. Energy intensity in Asia is very strong, and it's definitely missing all expectations on growth. It's definitely suffering and it's having to stimulate the economy. But oil demand isn't falling off a cliff in China, and I think that's what everyone's worried about because they see shocking headlines on China. But oil demand's not plummeting. Supply's pretty much constrained, and OPEC's showing levels where they come in to defend prices as well. So I think companies pay back debt, they buy back their shares, and they're paying dividends, and I think that's an attractive place to be in.
Yeah, the returns to shareholders are certainly there, aren't they? Before we let you go, one of the headlines across the terminal yesterday was another downgrade for US banks, the small and mid-cap ones coming through from S&P after Moody's. You have a constructive view on bank debt.
Yeah.
Are you looking at the small caps? Are you looking for the big blue chip, the JP Morgan names? What are you buying now?
I'm just buying 2-year bonds, senior unsecured debt from the big banks, and you're getting 6% yields on it with virtually no risk. There's no regulator going to let a senior bond go under. So financials, you're priced with a risk premium because people have seen the scary things of 2008, seen Credit Suisse. There's no risk in these bonds, in my opinion, but you're being compensated.
So you just click that 6% coupon?
Yeah, I think that's quite attractive.
Patrick Armstrong, thank you very much indeed with some calls there. The reaction to that deal, the restructured deal around Microsoft and Activision, good news and upside, Patrick thinks, in terms of how that deal gets across the line. He expects it will get across the line, and maybe some opportunities in healthcare as well as energy. Patrick Armstrong, CIO of Plurimi Wealth. Coming up, knock on wood, the CEO of Australia's biggest oil and gas producer says talks to avoid strike action that has sent natural gas prices soaring have been constructive. We get the details, we hear from the CEO. That is next. This is Bloomberg.
I've always been a person who's just been attracted to hair. I like to sit and think and theorize how I can manifest these visions that I have for braiding and how I can take something that may seem like it's a line drawing in my mind and apply that to someone's scalp.
We are the only culture that has hair that grows out of our head the way that it does. Anyone from the African diaspora is born with this amazingly curly hair that can be shaped into a variety of different ways of expression.
I want Black people to love themselves for how they naturally appear, and also to appreciate the cultural practices such as braiding that our ancestors have practiced for centuries.
The top names in business are on Bloomberg.
I think there is a case for 3% inflation going forward, plus or minus, and I think if we got to that point, then the Fed would begin to consider stopping and maybe even lowering rates over the next year or so. Chairman Powell is trying to replicate what Paul Volcker did, to slay the inflation dragon.
Nobody covers business like Bloomberg, your global business authority.
Start by saying there's actually a number of sectors in China that are going quite well. That includes green infrastructure, other infrastructure, automobiles, and so on. But the key sector, of course, that everybody's focused on, and which is very relevant to certainly to our business, is the property sector. Now, in property, we've seen strong completions up 19% year on year. But what's lagging is new starts. That's been recognized at the central government level. There's obviously policies in place that are meant to stimulate new starts, but they're not translating as effectively into changes on the ground as certainly we were anticipating, and I think some others were anticipating as well. So that's really what we're keeping an eye on over the next 3 to 6 months, is how effective is that translation of policy into practice. If we do see that starting to take hold, and we think there could be good growth momentum flowing from FY23 or calendar year 23 into calendar year 2024, outside of China. I was in India about a month back. The energy on the ground there, the optimism is palpable. So we're seeing solid momentum in India. Of course, that's a big market for us for commodities like metallurgical coal and for copper concentrate. So overall, we're seeing India and China comprising about half of world GDP growth in the period ahead. And the other point I would note is long-term fundamentals for this sector and for BHP remain really healthy.
The CEO of BHP, Mike Henry, speaking to Bloomberg a short while ago. Shares of BHP Group, well, we can check in those. Just give me a second in terms of the pricing around BHP, because, of course, there was a bit of a miss when it comes to the earnings picture there. Concerns, as we were discussing with the CEO, around the China exposure. And the stock is currently down. We'll see by how much in just the next couple of seconds. It is down in the session today by about 0.9%. Right, sticking with commodities, the CEO of Australia's biggest oil and gas producer says a recent spike in natural gas prices triggered by labour disputes in the country indicates that global markets are fragile. Woodside's chief, Meg O'Neill, spoke to Bloomberg earlier about the strike action.
We're making good progress on the discussions. We're engaging constructively. We're listening and trying to really understand the areas of concern that our workers have. And I think the meetings are going well. So we will just continue to engage in a constructive and respectful manner.
Okay, let's get more with our energy reporter, Stephen Stupinski in Singapore. Stephen, your reaction then to what is happening out of the gas flow, the LNG conversation that continues in Australia, the debate, of course, between workers and their bosses. What are you seeing across the energy markets right now, Stephen? How do you expect this to play out?
You know, we're seeing right now a wait-and-see sort of situation. Woodside is going to have a major meeting tomorrow with the unions. If there is no agreement at that meeting tomorrow, then those workers will strike at Woodside's largest LNG export facility, the Northwest Shelf plant, as soon as September 2nd. It's unclear how long it will take for those strikes to actually affect exports out of the LNG plant, because the strikes could be as little as 30 minutes of not working to full days. It could be to not unloading. It could be to not, maintaining facilities. It could be not restarting if there's a trip. There are a lot of different ways to strike, so it won't be clear until the strikes begin or to get an indication from the unions. But the big thing that the market is focusing is tomorrow, where are those discussions? Now, we did have the Woodside CEO on earlier. You saw her comments. She said that there's been progress, but they haven't made a deal. It's unclear if they will make a deal. And I think the market, when you look at the prices, basically 50% up from the start of the month, I don't think the market expects there to be an immediate deal. I think they expect there will be some sort of disruption. It's just how big will the disruption be and how will it affect global gas markets?
Yeah, currently natural gas futures in Europe pointing lower by about 3.8%. Well, currently trading lower by about 4%. So prices coming off marginally. Stephen, what is, just very briefly, in terms of the demand impulse out of China for energy and oil, is there more that's going to be sucked in from China in the months ahead?
You know, I think there is a general view that China could perhaps have already peaked. Their demand could have already peaked for this year. Now, of course, that could change depending on how refinery run rates go, but that will be something that could move the market if you do see an uptick in that Chinese demand.
Okay, excellent context, as always. Energy reporter Stephen Stupinski in Singapore. Thank you. Up next, we're going to talk ARM and that IPO. All the details next. This is Bloomberg.
MasterCard introduced PayPass, its first contactless payment system, in 2002, but the technology took some time to gain traction.
I would say we first invested in this many years ago. The adoption rate on this in the early part, even in markets like the UK, Canada, Australia, was fairly slow in the early part. The inflection point of when it really started to hit its stride was when it was used in the transit vertical. So what we figured is, let's get all the transit systems around the globe enabled for contactless technology. That will create muscle memory for the consumer who will like the experience in transit and will use it elsewhere.
How do you judge the revenue proposition for MasterCard with an innovation like that and the adoption and the pace of it?
Look, I mean, for us, we're agnostic as to whether somebody's using the chip technology or the contactless technology or, using the mag stripe, which was the old way of doing business. We earn revenues which are quite similar across both of those. The revenue potential and upside for us comes from the fact that now more spend is being done on card-based forms of payment than was being done in the past. So we're converting that cash over to electronic forms of payment, which is where the incremental revenue comes from.
If contactless payments is the current revolution sweeping the payments industry, what's the next one?
I think pay with your smile. So, biometrics.
On the David Rubenstein Show, Peer-to-Peer Conversations, I uncover the untold stories of the world's most successful leaders. Watch Wednesdays on Bloomberg Television.
This is Markets Today. We are 30 minutes into the European trading day, and here are your top stories. Treasury steady after global yields soar on higher for longer rate bets. The US 10-year yield hits a 2007 high. Japan's 10-year yield rises to its highest in 9 years. Chip design giant ARM files for what could be the biggest US IPO of the year, targeting a valuation of $60 to $70 billion as it looks to ride the AI boom. Plus, Microsoft submitting a new deal to UK regulators to get its Activision takeover across the line. The big concession, Ubisoft will get the cloud streaming rights for Call of Duty and all new titles for the next 15 years. Shares surge. Checking in on these markets on a day where the sentiment seems to be more positive. Yes, European equities ended just marginally up in the session yesterday, but the lift coming through from the US, the upside, of course, around technology, just pushing through the higher yield environment with the focus on NVIDIA and ARM's listing as well, giving a bit of optimism back to the tech sector. Some of the big tech names rallying yesterday and lifting the Nasdaq to gains of 1.6%. The session over in Asia has also been positive, despite the continuing ongoing concerns about China. The benchmark here in Europe gaining 0.5%. Over in Germany, the DAX adding 89 points. Here in the UK, the FTSE 100, at least for now, snapping 7 straight days of losses, 7,265, a gain of just 0.1%. Across your sectors, let's change the screen because we did see autos leading the pack yesterday. Real estate was the big loser across those sectors. The dynamic has changed today. It's tech that's really getting that lift. Not a big surprise given the session over in the US as a sector up 1.4%, but it does really question that narrative that tech cannot perform in a high yield environment. That is not what's playing out today. Basic resources also seeing a bit of a lift, up 0.9%. On the downside, just energy flat as a sector, but again, broadly, this is a risk-on sentiment, risk-on mood across these European markets. Again, volume slightly slighter and lower given where we are in the season and the month of August. Now, to the big corporate story of the day, really, Microsoft's $69 billion deal. It does look to be back on track in the UK. The Competition Markets Authority here now says it would reconsider green-lighting the deal after the tech giant agreed to sell the rights of all current and future Activision games released during the next 15 years to Ubisoft. Ubisoft shares are gaining as a result of that news. Let's get into the details then with Bloomberg's Alex Webb. Alex, how significant is this change in terms of the structure of the deal, and is it likely ultimately to get the sign-off?
I mean, it's certainly significant because the issue that they were encountering in the UK was an objection to the possible dominance of cloud gaming. This is very much a nascent space at the moment. It's not a very profitable space. What Microsoft is proposing right now is they will then license the online rights to many of their games to Ubisoft, and that they hope will let them clear it. Now, it also gives a kind of down ladder potentially for the CMA itself, which was very much an outlier now in objecting to the deal. The US regulators had also objected to the deal, but then a court there had pushed it through, had approved it irrespective. The EU has approved it. So it gives scope for lots of people to save face.
It gives scope for a lot of people to save face. It seems then, as you're saying, that it gets it closer in terms of the deal. What do you think it means in terms of the broader strategy for Microsoft? The importance of gaming on the clouds. To what extent does it accelerate Microsoft's ability to kind of spread and build out new business revenues?
Look, there are a number of different ways of looking at this deal. The first one is just the pure finances of it. I remember doing maths when the deal was announced, and even without any synergies, there was possibility for them to generate a return on the investment within 3 years, which is like something meaningful. Then you think about the synergies, and it becomes even more meaningful. There's also the cloud gaming piece. Vast opportunity, loads of people sense. Again, not quite profitable yet, trying to convince people to adopt it. It could be a number of years out. The third piece, of course, is the metaverse. The heat's kind of come out of the conversation as far as the metaverse is concerned, or if we just talk about it in terms of AR or VR. That is considered potentially a building block for Microsoft to do well in that space. You've got to remember, Satya Nadella, the Microsoft CEO, has done some really canny acquisitions over the years. He did GitHub. You know, of course, he's invested in OpenAI. There's a lot of faith in his vision for what he does with these deals.
So he's got a good track record in terms of deal making at Microsoft. When it comes to ARM, that was a deal, of course, that SoftBank couldn't go across the line. So they go for IPO. They've come through with the listing details. This is really significant, and it's significant in that AI place as well as NVIDIA, or at least as ARM, I should say, with the backing of NVIDIA, one of its big clients, looks to kind of carve out further revenue streams from AI. What are the details around the IPO?
So we've had visibility into the most recent finances. Well, we kind of knew some of the finances already because they have to file, of course, with Companies House in the UK. The thing, to my mind, the two things that really jumped out. Firstly, yes, they're positioning this as an AI play. The reality is they're not as strong in AI as NVIDIA is. The stuff they do with NVIDIA isn't really in the kind of hardcore AI piece. They do CPUs. AI is really about GPUs at this stage. The most telling number there from that front is the growth. They are not growing at the moment. They did not grow in the most recent quarter. They did not grow in the most recent fiscal year. That is not unique to ARM. Plenty of chip makers are not growing. In fact, that's why ARM isn't growing, because its designs aren't making headway right now. Partly that's because the slowdown in the mobile phone market. Now, that doesn't mean that they can't expand in these other places. They're sort of AI adjacent rather than necessarily always being core to the AI story. The second piece that was fascinating was China. China's 25% of their sales. They do so through what was originally a subsidiary called ARM China. The fascinating detail in the filings, they only now control 4.8% of ARM China. So they have a lot of risk in China. They also don't necessarily control the relationship with the companies there. Some have seen that as an upside because it's at arm's length. No pun intended, sorry. And that gives them a little bit of defensibility when it comes to embargoes and so on, but it also means they don't necessarily control it.
Okay, I'm not going to arm twist you on the ARM nod there. Really interesting, 20%, 25% revenues in terms of the exposure to China, so potentially some of the risk, and again, the urgency, as you say, to move away from the mobile devices towards those data centers and the AI upside. Alex Webb, thank you very much indeed on a really massive IPO, of course, massive significance to the chip sector and the geopolitics as well. Now, the explosion, staying on tech, of artificial intelligence technology does promise to offer plenty of positive new tools, but AI is also threatening to turbocharge fraud. Financial crime experts at major banks say the fraud boom on the horizon is one of the biggest threats facing their industry. For more, let's bring in Bloomberg's finance and deals reporter Nabila Ahmed, who is one of the authors of today's Bloomberg Big Take. Nabila, what are some of the ways then that new technologies are making it easier for scammers? I have to say, I read some of the Big Take. It's a fascinating read, but it's also pretty terrifying.
It's so scary, this story, right? So scammers are running their business as a business, just like the banks are. And like any business out there, they're trying to figure out how the latest technology can make them more money. And AI is just another tool that they're now using. And AI is being used on every different level of scam. So you've got something from AI being used to clone a child's voice to appeal to a parent for money, to AI being used to write very realistic-looking fake prospectuses that entice investors to invest, and then all of a sudden you've lost hundreds of thousands of dollars before you've even realized it.
And I know as part of the piece, you interviewed some of these risk managers, some of these men and women who are kind of tackling and trying to tackle and keep ahead of this fraud. What are the banks doing right now to help kind of curtail these risks and these scams?
So firstly, Tom, they're really just throwing money at the problem, which they do have to do. And the estimates are that by 2025, costs for fraud detection and prevention at global banks will have risen to about $12 billion. And that's about 26% higher than it was in 2021. So you can see the rapid rise in costs. We spoke to people at Deutsche Bank and Wells Fargo, among others. And Deutsche, for example, has rebuilt its fraud detection and prevention system, suspicious activity systems, based on the latest natural language processing tools. At Wells Fargo, they're also overhauling their business, which looks at how to detect these scams using the latest AI technology as well.
So it's a bit of a cat and mouse game, as it often is with these kind of situations. What can we, Nabila, expect next in terms of how this evolves?
So the banks are really trying to spread the cost. So, they're on the hook for billions and billions of dollars each year. In the US alone last year, $8.8 billion was lost, which is up about 40% from the year before. So the banks are now saying, hey, why should it just be us carrying the load of this? How about the tech companies? They're the ones that are hosting some of these fake investment platforms on their search engines. So why doesn't the government go after them as well? And in the UK, for example, new rules are coming in where the big tech companies and social media firms will be held more accountable for fake ads on their platforms. So you're going to start to see some of the costs shifting towards other industries away from just the finance sector.
Okay, and obviously some of that cost will ultimately end up in the hands and in the pockets of the consumer. Thank you. Really, really gripping read, unnerving as well, as you say. Bloomberg's finance and deals reporter, Nabila Ahmed. You can read more on that big take. Just go to NI Big Take Go on your terminal or visit Bloomberg.com. It is essential reading. Coming up, S&P joins Moody's in cutting US banks. But why now? We discuss. This is Bloomberg.
And says, I want to be Ari Emanuel when I grow up. What should somebody do to get into the talent agency business or the business you're in?
Well, it's hopefully what I've taught my kids. You got to be intellectually curious. You got to be, you got to show up. And you know this like I know this. I got on a lot of planes. Even though that voice in your head is saying, oh God, I'm so tired, I don't want to do this. You got to show up. You got to be charmingly relentless. You have to build emotional endurance because there's no straight line to success. It's kind of all over the place, and you have to just be able to work through those things. And then I think one of the things that I do every week is I try to create serendipity.
The top names in business are on Bloomberg.
We're seeing a resilient consumer out there. We're also seeing consumers premiumize, and what we mean by that is consumer habits are changing. People want to drink better, not more, but higher quality spirits. And so, look, it's been a bit of a balance this year, battling inflation. At the end of the day, we see volumes growing back over time.
Nobody covers business like Bloomberg, your global business authority.
Good faith
your challenge. Next.
It was going to keep rate World Cup. This is a 3.
As the economic picture does. The BOK is getting ready to make this decision.
This is Markets Today. We are 43 minutes into your European trading day. It is risk on across European markets. Gains of 0.7%. The run-up in yields is coming off, and the dollar is slightly softer. US futures pointed to gains of 0.2%. And here in Europe, it is tech that is leading the charge, adding about 1.9% as a sector. Now, it was only 2 weeks ago that Moody's rattled markets by downgrading a slew of US banks. Now, S&P is following suit, downgrading and dimming its outlook for several more, citing a similar mix of pressures making life, quote, tough for lenders. For the details, let's bring in Tom Metcalf, who leads our finance team here in Europe. Tom, which banks then are impacted?
Yeah, so these are the smaller mid-sized banks. So the S&P report is effectively 5 banks. So it's banks like KeyCorp, Comerica. They've all been downgraded, and a few other in that sort of space have also kind of had their outlooks cut.
What is the biggest pressure point then for these banks that are being flagged by these ratings agencies?
So it's obviously the rise in interest environment. That's what's really putting the pressure on, because what it's causing is, people are now going out and looking for deposit, higher paying deposits. So that's kind of cutting their liquidity in one way. And then on the flip side, you've got the poor markets. So, the values of those securities are falling. So the other way banks can kind of restore their liquidity is trying to sell securities. But obviously with the values lower, that's kind of hitting their liquidity too.
What is the outlook? Are we looking, is there another potential kind of another March kind of banking crisis? Is this contained to the smaller lenders? Are the big names, are they potentially looking at downgrades themselves as well? What is the kind of outlook in the months ahead?
I think there's a bit of a split, so it's particularly the smaller banks that are under pressure, and it's just kind of a grim outlook. It's not sort of existential or anything like that, at least yet. I mean, what everyone's looking at is interest rates, right? If the Fed continues to rise, this is a painful situation, is going to continue. If that sort of reverses itself, then things start to look a bit brighter for these banks.
It all kind of swings back to Jay Powell, doesn't it,
Always.
Ultimately? Tom Metcalf, thank you very much indeed, of course, who leads our finance team here in Europe. Let's cross over now to what is happening on the ground in Pretoria, in South Africa. The BRICS Leaders Summit kicks off today, but before that, Chinese President Xi Jinping is being hosted by his South African counterpart, Cyril Ramaphosa. For more, let's cross over to Jen Dabasaja, who is on the ground for us and will be throughout the week. Jen, what are these two BRICS leaders discussing today? Talk to us about the importance of the South Africa-China relationship.
Yeah, I mean, Tom, as you know full well, it is very important to both of these countries, and it's especially if you think about it in the context of what's happening this week. There is the BRICS summit, but this is the only state visit that we're going to see. And if you can see behind me, there is a lot of pomp and circumstance preparing for the Chinese president to come here. But just talking about the strategic relationship that these countries have, they say that what they have is a vibrant economic relationship. South Africa really relies on China. It's one of its most important investors into this country. And on the reverse, South Africa is very important to China. It is its biggest trading partner in Africa, and it has been for the past 13 years. So what we're anticipating these two leaders to discuss is really how to deepen that relationship, whether or not we'll potentially see more partnerships and more opportunities for collaboration. And what we've specifically heard from the South African side is how to diversify South African exports so that they are reaping more of the benefits of this economic relationship. And so there's a lot on the agenda in particular today. And so we're going to have to wait and see whether or not anything actually comes about in this meeting.
Yeah, and another potential friction point, and I wonder if the South Africans are going to be able to kind of navigate this, is India and China. And we're hearing that India's Prime Minister, Narendra Modi, of course, is going to be reportedly meeting with Xi Jinping this week. Consequential, given, of course, the kind of historic frostiness between those two nations. What is on the agenda for that meeting?
Yeah, Tom, I mean, I'm sure you know, over the past several months, South Africa's really had to navigate a lot of challenges with this particular summit. So this seems to be just another one that they could potentially be navigating. But what we've learned at this point in time is, yes, Prime Minister Narendra Modi will be here in South Africa, as will Xi Jinping. And it will be the first time that these two leaders are actually sharing a stage since the G20. And what we've heard from both sides is that, yes, they do have this land border dispute that has really been a problem for their tensions for the past several years. But what we heard from the Chinese ambassador is that, yes, they do have a lot of problems, but they also have a lot of common interests. And so Whether or not they're going to meet is still on the table. The bilateral meetings between both presidents, or both the prime minister and the presidents, were still being finalized as of our reporting. And so we're going to have to see whether or not that actually comes through. And of course, plenty on the table for them to talk to, especially when you think about how significant they are for the success of BRICS as the two biggest countries.
Yeah, a very consequential relationship. So we'll be watching that meeting very closely. And Jen, I mean, every single country involved in this meeting, of course, leaders dealing with their own domestic challenges, whether it's Russia or Brazil or indeed, of course, China. How do they square those domestic challenges with the need to kind of coordinate on this global stage?
The concern is that they may not be able to, Tom, really, because, I mean, if you think about it, this coalition of countries was created so long ago when a lot of these countries were, of course, emerging economies. And as you just alluded to, these leaders have a lot of issues that they're dealing with at home that they really cannot ignore. But what we have heard over the past few weeks is their shared interest in really reforming a lot of these multilateral institutions. And so whether or not they can come together and really produce a common communique with a cohesive narrative of what it is that they're looking for as a BRICS bloc remains to be seen. Because, of course, if we just look at the five within that make up BRICS at this point in time, they're very far apart on a number of political and ideological issues. And then when you factor in potential additional countries that are coming in, that just complicates it even more. But we'll have to see, because they've really zeroed in on this reform of institutions such as the IMF and the United Nations Security Council. So maybe they'll be able to come together on that. But we're going to have to see over the next few days whether or not that's actually possible.
Okay, Jen Pasaja on the ground for us in Pretoria for this BRICS summit. Thank you very much indeed. Coming up, yuan, yields, and yes, chips. We're going to wrap up the top stories this market open. Stay with us. This is Bloomberg.
Everybody want to be a consultant, and what are all these consultants doing?
Well, David, I think that we actually defy the label consultant, because sometimes consultant seems to imply that we only give advice. And when you look at what Accenture does, we're really different than the traditional version of a consultant. We're really about relevance and results, and that's what is driving our business.
What about a consulting project? In my example, I'm the CEO, I have a problem, I call you up, I say, solve my problem or give me a solution.
We don't operate as big companies permanently in crisis mode. And so when you think about, like, how long does it solve things, a lot of it starts with, you know, the company being willing to set aggressive goals. And so what we are trying to do now is work with our clients to work differently and to work faster.
Markets count down in Europe from the financial centers of the world. Bloomberg Markets European Close with Guy Johnson in London and Alex Steele in New York. Real-time numbers, real-time analysis. Weekdays. This week, Bloomberg is live from the annual Jackson Hole Economic Symposium. Our expert team speaks with Fed presidents and other economic leaders as they deliberate the shifting global economy.
What is the response mechanism?
It's not how fast we do it, it's where we go.
Coverage starts Wednesday, August 23rd with a special edition of Bloomberg Surveillance live from Jackson Hole on Friday, August 25th, starting at 8 a.m. Eastern. Bloomberg, your global business authority.
This is Markets Today. Happy Tuesday, 53 minutes into your European trading session. We are risk on across equity markets. Gains across Europe of 0.9%. Tech as a sector is leading the charge, up 1.9%. US futures, S&P E-minis, are gaining 0.3. The dollar is softer, and the bond markets are taking a bit of a breath because the yields are coming in across the US Treasury curve after that very steep run-up that we saw yesterday, getting, of course, the 10-year to levels we have not seen since 2007. On that and much more, let's bring in Eddie van der Walt for the key market themes as we come to the close of the first hour of the trading session. Eddie, let's talk about the yield story then. Do you think that, I mean, we're seeing a bit of a breather now. Your views, what are the market's expectations around the run-up in yields and whether or not there's a bit of a pause now ahead of Jay Powell and Jackson Hole?
Yeah, absolutely. Look, I think there is probably a bit of a pause. We saw that probably the last bit of that sell-off yesterday, but I think the story of re-steepening is one that's going to have to be with us if we get to a more normal world again, right? So if we see that re-steepening, we're probably seeing that with the back end of the yield curve rising significantly over the next few months, unless we see a recession which brings down the short end. And so if we get a soft landing, re-steepening, then it's going to have to be the back end that moves. And I think, therefore, this is going to be a continuous story that we're going to have to contend with. So I think we get this pre-Powell pause, but then I think that story has to continue.
PPP, the pre-Powell pause.
Absolutely.
There's the ripple effects, of course, from what's happening in the US, the higher yield environment, the higher rates environment, and Jay Powell's next steps, and the FOMC's next steps, and what's happening in China. And we saw again a record fix from the PBOC. What is your take on how policymakers in China are handling this? The concern about weaker yuan, or indeed if it's going to give a bit of lift to the exporters over in China?
Yeah, so there's two ways of reading this today. A lot of people are saying, look, that the PBOC is really squeezing the shorts and really, going all in to kind of engineer a rally. On the other hand, it looks a little bit more to me like it is part of their step-by-step intervention, little by little, just seeing how much the market really needs, and just keeping a little bit of support. So I think this is more about slowing the decline of the yuan than it is about squeezing the shorts and instigating a new rally.
The other big story, we're looking ahead, and this lifted the tech stocks yesterday, stateside. So you have the NASDAQ ending up about 1.6%. The excitement about NVIDIA.
NVIDIA is about more than just the AI story, right? We're all talking about AI, and that is what's fueled their price growth this year. But that company is going to tell us more tomorrow. They're going to tell us something about consumer demand, because remember, they still make video cards for gamers, of which I'm one. And that's a very high-end consumer discretionary product. At the same time, it is about, the Bitcoin story. So about consumer or investor demand for highly speculative assets. And then, of course, it's about the supply chains. It's about, can they get enough chips to make their video cards? So I think they're probably going to tell us more than Powell's going to tell us about where markets are going for the rest of the year.
Far Cry 6 then, Eddie. That's your game of choice.
That is my game of choice, which I should say is actually optimized for their competitor, AMD. So there's another sub-story there about whether AMD can catch up with NVIDIA.
Is there anything you can't bring to these markets, Eddie? This is brilliant. Touch on Bitcoin as well. Far Cry 6, the gamer there on the take as we look ahead to those NVIDIA earnings tomorrow, of course, and the excitement in terms of the AI play. Eddie van der Walt from our Markets Live team. Get more from Eddie and the team, of course, on the terminal and on Bloomberg.com. That is it for Markets Today. We are risk on. Stay with us. US futures pointing to gains. This is Bloomberg.
2018, the IPCC did what was called the 1.5 report. What was the difference between what a 2-degree world looked like and what a 1.5-degree world? And the catastrophe to the planet between those two poles led everybody to conclude that actually the job is bigger. We have to go to net zero. And that's a transformation of the global economy on the size and scale that's never occurred in human history. So that's a kind of daunting task, but it's full, I think, also of challenge, opportunity, the chance for innovation, and the chance to have the private sector play a fundamental role in making that change happen.
On the next episode of The Circuit.
It's still almost shocking how new you still are to this sort of being famous thing.
When I do, you know, go out and people are like crying, that's when sometimes I'm, whoa, why? There's no rule book for it.
Watch The Circuit with Emily Chang, Thursdays, 10 p.m. Eastern on Bloomberg Television, or 8 p.m. Eastern on Bloomberg.com or the Bloomberg app on connected TVs.
Good morning, good morning. This is Bloomberg Surveillance on TV and radio.
Welcome to Bloomberg Markets, China Open.
Good morning, everyone, and welcome to The Pulse.
This is Bloomberg Technology. And welcome to Balance of Power. This is Bloomberg.
It's really a reminder, isn't it, just how sensitive the markets are to any commentary about trade. We did see some pressure on the yuan, we did see some pressure on the futures. That is now being reversed.
Good morning and welcome to The Pulse. I'm Manus Cranny in Dubai. Here's what's coming up on today's program. Microsoft submits a new deal to the UK regulators to get its $69 billion takeover of Activision Blizzard over the line. Treasuries are steady after global yields soar on the higher for longer rate bets. The US 10-year yield hits the highest since 2007, and Japan's JGBs rise to the highest in 9 years. Plus, we'll be live to Pretoria, where South African President Cyril Ramaphosa is hosting his Chinese counterpart, Xi Jinping. That's ahead of the BRICS summit. Very good morning, warm welcome to the show. Let's take a look at the European map. I'm surprised. Billy's profit is down by 37%, and yet you have this strength in the minerals and resources. Tech is on the up, partly due to the NVIDIA ramping by 8% last night. Their numbers come this evening. ASML, ST Micro also drifting higher. You know, hope lives eternal. NVIDIA better not disappoint tonight. There's the pre-market up 1.29%. We're now up 10% in the space of 2 trading sessions. NVIDIA had better deliver. Now, Billy's profit dropped by 73%. I can tell you that was a little bit of a shock in terms of the actual scale of decline and the deposits. Is Europe cheap on a relative basis? Billy says terms, while your SPOOs are up 15%. However, your profits are dropping much more aggressively in Europe relative to the United States of America. Across the assets, this is the state of play. I mentioned the bond market. I mean, they are literally on fire. What's the 101 rule of bond investing? When you got positive real yields, buy them. Bob Michael, of course, at JP Morgan Asset Management said he wanted to buy every dip. Sounds like the sound of music to me. But the bottom line is 10-year government bond yields coming off their zenith, the highest since 2007. But it's the real yield that you want to keep an eye on at 2%. What does that do to risk? JGBs testing the mettle of the Bank of Japan as JGB yields rise. What could happen next? The Chinese are nervous, to say the least. They have an unbridled currency, and they step in to try and pull it back on the reins as they do over 1,100 pips stronger in the fixing. Yet still, as New York wakens up, you begin to see a little bit of a drop in the yuan and a rise in the dollar. Stock 600 resources up by 1.42% at the moment. The deal. Microsoft's $69 billion deal for Activision Blizzard, the acquisition, has got a new chance winning approval from the UK regulators. That's after the tech giant submitted an amended deal to the country's antitrust watchdog. Let's get the latest with Alex Webb. Alex, this is what's called trying to get it over the line with, I suppose, a little bit of acquiescence to the regulator.
Yeah, it is a useful kind of ability to save face for both the companies and, of course, the regulator itself, which was really the only holdout now in terms of preventing this deal from a regulatory perspective. The European Union has cleared it. Regulators in the US tried to block it, but ultimately it was pushed through by a court. The difference is, of course, that in the UK they were blocking it on the basis of potential dominance in cloud gaming. That's where you're playing on the cloud. Microsoft, of course, has its Xbox platform on which it could do that. In the US, the argument was, well, will they just dominate and the platforms and pull games such as Call of Duty away from, for instance, PlayStation. Microsoft successfully made the case in the US that it didn't make economic sense for them to do that. Now in the UK, they've offered this big concession whereby they will license essentially the distribution of their games in cloud gaming to Ubisoft, which they hope, and a lot of the consensus at this stage seems to suggest that people think they will assuage the CMA's concerns.
Yeah, they're going to sell the rights to what the next 15 to Ubisoft. Ubisoft is powering ahead. It's up over 6%. Let me just check for our viewers. 6.69% on the back of that. Now, mud in your eye to London. Arms off to the NASDAQ for the IPO. But I suppose that's about reputation and competition. But what do we learn from the filing from ARM?
The thing that was particularly interesting were 2 points. There was an earnings piece which showed that actually their earnings growth has, well, has shrunk. They haven't actually grown in the past year or indeed the most recent quarter. That isn't unique in the chip industry. And in fact, it's because there are large tracts of the chip industry that aren't growing that ARM itself is having a tougher time of things. That also suggests they maybe don't have the same sort of exposure to AI that their investors would like, or their board would like you to believe, but also that they are not similar to NVIDIA, which has massive growth. The second piece is actually the way they are exposed to China. They're about 25% of sales to China. It goes through what used to be a subsidiary, ARM China. It is the really interesting detail was that they only now control 4.8% of ARM China. So that is a little bit of a risk. It means that they don't necessarily have direct control over the way they do business in that country, but yet they have significant earnings exposure to it. So those were the two big jump outs from a financial perspective in the filing.
Okay, Alex, let's see what happens with the Microsoft deal. And just as Ubisoft, as I said to you, is one of the key beneficiaries, let's just check the price. 28.72. The stock rose as much as 7%. The French company has signed a deal with Microsoft, we understand, or it will sign a deal. And this is for Microsoft selling the rights of all the current and future Activision games released during the next 15 Ubisoft, the next 15 that are released. So there you go, the winner, the vicarious winner in the Microsoft Activision Blizzard trade is how to get around the regulators, Alex Webb. Okay, let's talk about the BRICS and the leaders. The gathering, the summit is kicking off today. But before that, the Chinese President Xi Jinping is being hosted by his South African counterpart, Cyril Ramaphosa. Let's get across to Jen Zabajaja. She's on the road. You've left Joburg. You're in Pretoria. Big moment for these leaders to meet. Jen, good morning.
Morning, Manus. Yeah, definitely. And you can sense that on the ground here. We're just a few minutes out as we're hearing from Xi Jinping actually coming to start the one and only official state visit that is happening this week amidst all the other BRICS activities that are happening. But as you mentioned, this is very important. And just the fact that they're hosting this state visit is very strategic and important to both of these countries. From the Chinese perspective, South Africa is its biggest African trading partner and has been for the past 13 years. And from South Africa's perspective, China is one of its most important investors. And South Africa was actually the first African country to sign on to China's Belt and Road Initiative. So this diplomatic relationship goes back over 2 decades. So what we're hearing these two leaders are planning to discuss is how to further deepen that relationship and how to potentially explore new opportunities in various sectors, from mining to agriculture, and of course, energy, which is of great importance here in South Africa. And so we're expecting them to speak about that, but also talking about what sort of reforms they're looking for on the multilateral, within multilateral institutions that they maybe can agree on, and also how to diversify South Africa's exports to China. But because, of course, we know South Africa imports a lot from China, but they do not believe that they're getting the value add that they potentially could. And so a lot on the agenda today. And so we're just waiting here for China's President Xi Jinping to arrive, which we're being told is imminent, Manus.
And another bilateral will be the Indian Prime Minister Narendra Modi reportedly meeting with Xi this week. What do you think is going to be top of their agenda?
Right, Manus. I'm glad you stressed that it's reported, because we're still unsure, and from both sides what we've heard is that there is a potential for this bilateral meeting and that their schedules, as of yesterday, was still being finalized. But we did hear from the Chinese ambassador saying that despite a number of disputes that they have, of course, the most well-known one is probably their land border dispute, they do share a lot of common interests, and especially if you factor in the point that India and China are the biggest BRICS nations. They make up the majority of the economic activity and the GDP of the BRICS nations. They have a lot on the agenda to talk about. Whether or not they're actually going to meet one-on-one is unclear, but we will see them on a stage for the first time since last year at the G20.
Okay, so big moments all around on the geopolitical front. Jen, thank you so much. Jennifer Zabazaja in Pretoria. Coming up in the show, the global bond yields are soaring. We're going to discuss what does higher for longer really mean to investors as you position for the U.S. economic resilience right here on Bloomberg. Good morning.
Solar energy, wind power, battery-operated cars. The transition from old to new energy forms has investors placing bets on which technologies will come out on top. Bruce Flatt's Brookfield Asset Management sees what it calls massive opportunities. Its new impact fund raised more than $15 billion, and Flatt says it could have raised more. The fund has two targets: companies that need to dramatically curb greenhouse gas emissions, like power providers, and those that are in a position to dominate in clean energy. Brookfield hired former Bank of England Governor Mark Carney to strengthen its environmental, social, and governance investing. In March, Australian utility AGL Energy shot down Brookfield's takeover offer. The firm had aimed to accelerate AGL's transition to net zero emissions by over a decade. Carney signaled that this was no problem. He says Brookfield is reviewing at least 50 potential transactions across a range of industries.
From our studios in New York and San Francisco, our expert hosts have the data and analysis about the companies you know and the startups to watch, plus the interviews you don't want to miss. Watch Caroline Hyde and Ed Ludlow on Bloomberg Technology, the only daily business show dedicated to tech, right in the middle of the trading action. 12 p.m. on the East Coast, 9 a.m. in the West. Only on Bloomberg Television, your global business authority. This week, Bloomberg is live from the annual Jackson Hole Economic Symposium. Our expert team speaks with Fed presidents and other economic leaders as they deliberate the shifting global economy.
What is the response mechanism?
It's not how fast we do it, it's where we go.
Coverage starts Wednesday, August 23rd with a special edition of Bloomberg Surveillance live from Jackson Hole on Friday, August 25th, starting at 8 a.m. Eastern. Bloomberg, your global business authority.
It's the conversations that matter, the insights that you need. They're right here on The Pulse with me, Menace Cranny, in Dubai. So the global bond yields are soaring. Investors are positioning for this higher for longer interest rate cycle. 10-year paper in the States hit the highest level since 2007, and 10-year JGBs hit a level we haven't seen since 2014, testing the metal all the way around. Anita Gupta is the head of equity strategy at Emirates NBD. Good morning.
Good morning, Manus.
Here we are, real yields at 2%, a bond market that's lit up earlier than Christmas. What does it mean for risk?
Very strangely, what we found was that in the first half of 2023, yields and equities were highly correlated. So you had yields going up and you had equities in developed markets performing well. Now we've come back to fundamentals. So we saw a sell-off about 5% on global equities as yields have risen, with the 10-year at 4.33%, with the 2-year close to 5%. So definitely there is an impact on risk. But have the yields peaked? That's what's important for equities.
Do you think they have peaked? I mean, I've got Stephen Major saying, step in and buy bonds here. You've got Bob Michael saying, buy every dip. But yet we have this narrative that this isn't revolutionary, this is returning to norm. So do you think we are going to see 5% on bond yields? Are you ready for 5% on bond yields? What would it mean for you on equity to bond allocation in the portfolio?
I think this current inverse correlation is going to continue. If you continue to see yields go higher, I would definitely be worried about what's happening, especially to US equities, European equities, Japan. We've got all 3 10-year yields at about a 10-year high. What we are looking at is that all further hikes, especially for the Fed, are data dependent. And inflation is softening, so hopefully we would look at maximum another 25 basis point hike.
Well, I hopped into the green room with you earlier, and I said to you, so real rates are 200 basis points. What does that mean? And you very firmly said, well, it means the Fed doesn't need to hike any further. And if you look at the op-ed that we have this morning, Kashkari reflected on the neutral rate as being 200 bips above where inflation is. With that in mind, the Fed is done, let's say, if that is the theory. Would that mean that you'd be a buyer of dips in these equities? There's going to be a few jolts, all right? We're not going to stop at 433. There'll be a few attacks on the upside in yield. That will deliver entry opportunities for you in equity. Is that the correct way to look at what you're saying to me?
At this point, I would say that yields are the biggest catalyst for equities either way. However, we've just had an earnings season better than expected, expected to be the trough in earnings for the US at least. So if that's the trough in earnings, eventually equities will perform based on earnings. And this is where we come to the differentiation. Very interesting fact which I read on Bloomberg, which I think was put out by Goldman Sachs. Only 50% of the companies listed in the US are profitable. So again, here we come back to quality. It's not about just buying the dip. It is about buying quality. And if yields are high, buy companies with strong balance sheets.
Tell the truth. Have you got a little bit of NVIDIA?
Well,
I know you don't do individual names.
Oh, we do. It's okay. I can comment on NVIDIA because
I like her. I like a guest that can commit.
Yes.
Commit to me.
Okay, so what we are looking at for these AI-driven rises in equity performance, and now there is a gap of about 60%. So any company which is an AI enabler or an AI platform is roughly about 60% above another company which is not caught AI in any form. And if you're looking at NVIDIA, you're talking here of about a 50% revenue growth expected this quarter over last year. This is coming back to what was happening with Amazon and Google on cloud. So they were having these 30 to 40% revenue increases, profit increases, cloud growing. Now that's come down a little bit to about a 15 to 20% growth. So the semiconductors and NVIDIA does manufacture the high-end chips needed for AI. So it is currently a win-win for NVIDIA.
Now, if I look at China, I'm desperately trying to talk to every CEO at Woodside Petroleum, saying small fissures in terms of the overall energy demand. You look at MSCI China down 11% in August alone. They are grappling with the FX market quite desperately, I would say. Can you live, or would you dare to live, without China as an allocation? And if so, how would you allocate at all away from it?
We were a little brave. We went neutral EM Asia 2 months ago, and then we had a China rally. And then was it like, are we wrong? However, what's happening with China is you have this 1 month 10% rally and then it goes down again. So we don't want to be very heavily allocated to a very volatile market. I think, again, as we spoke earlier, markets don't behave on hope. Markets behave on reasonable estimates. And China needs to show some fact in terms of where that growth is coming from. You've had a number of houses downgrade economic growth. Again, we have had issues around real estate. We've had defaults. We've had investment companies that are not paying up. This is worrying. We're not seeing inflows into China, so we are neutral at this point on China. And I think we would be till we see some factual data that would convince us about the resumption of consumption. That's
Hope does not pay the bills, does it, Anita Gupta? That is the bottom line. Thank you so much for being with me. That is Anita Gupta, Head of Equity Strategy over at Emirates MBD. She can live without a max allocation to China. Coming up in the show, not just gassing. Woodside Energy says talks with LNG workers have been constructive. We'll bring you our conversation with the Woodside CEO, Meg O'Neill. That's next on Bloomberg. Good morning.
I've always been a person who's just been attracted to hair. I like to sit and think and theorize how I can manifest these visions that I have for braiding and how I can take something that may seem like it's a line drawing in my mind and apply that to someone's scalp.
We are the only culture that has hair that grows out of our head the way that it does. Anyone from the African diaspora is born with this amazingly curly hair that can be shaped into a variety of different ways of expression.
I want Black people to love themselves for how they naturally appear, and also to appreciate the cultural practices such as braiding that our ancestors have practiced for centuries.
Business Week Radio, live weekday afternoons at 3 p.m. Eastern.
We got a little bit of talking.
Come on, are you guys ready?
Harnessing the power of Bloomberg Business Week, Carol Masser and Tim Stanovic bring you the latest news from the worlds of business, technology, politics, and more.
How does the Fed play into this and what the Fed does potentially?
This is so exhausting and this is so all-encompassing.
Listen on Bloomberg Radio and streaming on YouTube and Bloomberg Originals.
From New York City,
From London, in Sydney,
from Washington,
in Tokyo.
9 a.m. in Beijing and Shanghai.
Good morning, everyone.
Have a great evening.
Here's what I'm watching.
You do not want to miss this
Is
story.
there the kind of upside?
Quick snapshot of how the miners are doing this morning. Profits of BHP Billiton fall by 37%. They are slashing the dividend. The stock down by just under 1% at the moment. The rest of the miners actually aren't doing so badly, even though Billy's talk about earnings in iron ore, coal, copper, and nickel all declining. So keep an eye on that. The rest of the energy complex is on the up. Have we hit a trough in China? That's the question I ask myself. Let's focus in on Billy's. They reported the lowest annual profit in 3 years. For more, let's get to Stephen Tuchinski. He joins me now from Singapore. What caught my eye, Stephen, down Woodside, down in Australia, and down this morning in London. Talk me through what caught your eye in Billy's. The dividend being slashed to 80 cents caught mine. Good morning.
Yeah, I mean, the dividend being slashed, you could see that maybe coming if you were looking at, like, Rio Tinto did the same thing in July. You know, they're also one of these major miners. But I think the focus, of course, is the outlook on China. It's not so surprising, given everything that's been happening in China with the economy, with the kind of real estate troubles that's been happening there. The stimulus in the country, according to the CEO of BHP, is that the stimulus in China is not. It's helping propping up some demand. The second half, they said second half demand looked better than the first half in their full year earnings, but still, when you look at where the Chinese stimulus is affecting the economy and affecting growth in the country, it's not coming through in demand for iron ore the way that they were expecting it to. And so because of that, it's looking very uncertain in China. And he was, I think pretty honest in the interview earlier, saying that it wasn't clear what's going to be happening with Chinese demand.
Well, just hold that thought, because, of course, Meg O'Neill over at Woodside, which closed down 1% in Sydney, she talked about the fragility of demand in China. Australia's biggest oil and gas producer, the first half results pretty much being overshadowed by the strike talks with the LNG workers. I caught up with Meg O'Neill, the CEO, a little earlier, and we talked about the current state of the LNG market in Europe.
The fact that the market has responded in such a significant way to the rumor of a potential industrial action suggests to me that the market is still quite fragile, and that European buyers and the European market is concerned about the levels of supply that they will have going into the Northern Hemisphere winter.
Briefly, Stephen, she's not outstandingly bullish on the forward pricing market, is she?
I think one thing that she really focuses on is, there's a lot of uncertainty there as well. While she's not terribly bullish, I think it's really interesting that she called the possible strikes rumors, because there are discussions happening. There are unions threatening to strike, and while the strikes haven't started, they could start, if there's not a breakthrough in talks with Woodside, as early as tomorrow. Those strikes could be in early September. If that does happen, you could see quite a bit of upside on gas prices, not only in Europe, but also Asia as well.
Stephen, thank you much. Stephen Tuchinski there in Singapore on all things energy. The BRICS leaders kick off the summit today. We discuss.
watching and says, I want to be Ari Emanuel when I grow up, what should somebody do to get into the talent agency business or the business you're in?
Well, it's hopefully what I've taught my kids. You got to be intellectually curious. You got to be, you got to show up. And you know this like I know this. I got on a lot of planes. You just, even though that voice in your head is saying, oh God, I'm so tired, I don't want to do this. You got to show up. You got to be charmingly relentless. You have to build emotional endurance, because there's no straight line to success. It's kind of all over the place, and you have to just be able to work through those things. And then I think one of the things that I do every week is I try to create serendipity.
Welcome to the world of decentralized finance.
You can see the massive gains for the OG crypto coin.
The breakout we have all perhaps long awaited finally realized. We'll see if it sticks.
Bloomberg's covering all things crypto, the people,
There's no question this industry is composed of some bad actors and some good actors.
the transactions,
Volumes have surpassed $24 billion per day.
and the technology.
Stop talking about the technology, start demonstrating the utility.
Bloomberg Crypto, Tuesdays.
This is Bloomberg.
Microsoft submits a new deal to the UK regulators to get its $69 billion takeover of Activision Blizzard over the line. Treasuries are steady after global yields soar on higher for longer rate bets. The US 10-year yield hits the highest since 2007. Japan 10-year yield also trades at the highest level in 9 years. Plus, we're live to Pretoria, where South African President Cyril Ramaphosa is hosting his Chinese counterpart, Xi Jinping. That's ahead of the BRICS summit. Good morning. It's The Pulse. I'm Manus Cranny in Dubai. The BRICS leaders summit kicks off today, but before that, the Chinese President Xi Jinping is being hosted by the South African counterpart, Cyril Ramaphosa. For more, let's get to Pretoria. Jen Zabazajeh is outside government buildings. These two leaders have a lot, let's say, structurally in common. What will top the agenda today? Jen.
Yeah, Manus, good morning to you. And these two leaders have really, over the past few weeks, days, weeks, and months, really stressed the importance of this relationship. We actually saw yesterday Chinese President Xi Jinping actually take out an op-ed, an editorial in the papers, talking about just how important this relationship is to their country. And from his perspective, it is a vibrant economic relationship that could be potentially deepened and further explored. And he talked a lot about how rich South Africa is in a number of different sectors, and potentially how that is an opportunity for Chinese investors, but also for South African businesses to then export to China. Because for the most part here in this country, in South Africa has been a major importer of Chinese goods, which is significant for China, especially when we look at the African continent. This relationship is very important to both of them, but just going forward, these leaders are really trying to look at what more can be done. And really, they have a lot that they're individually interested in, depending on which region you're sort of looking at.
Jen, they're all lined up there, full red carpet, ceremonial, ready to go. Jen Zabazajeh in Pretoria, tracking the BRICS summit. Well, let's just expand that conversation to the EM space. Phoenix Kalen is head of emerging market research over at Societe Generale. We were looking at the theater of BRICS, and we had Jim O'Neill saying, well, really, apart from China, everything else has been relatively disappointing. So let's focus in on China. How important is it for Xi Jinping to re-grasp control of the yuan, which seems to be failing at the moment, the biggest fixing on record again? How important is that to Xi and to the PBOC? Good morning.
Good morning, and thanks for having me. Yes, I think the currency is definitely one of the key underpinnings of the economic policy around China at this point, given how the data has massively disappointed, especially over the past month. We are looking at indicators that are suggesting that China's facing all-out deflation across all the various economic indicators. There's been a massive disappointment, and the currency fixings, they've tried to fix it much stronger. Each day we've seen the fixings rise up to even 1,000 bips. So similar to the levels that they were trying to fix it stronger last summer as well. So very high levels. And this has actually still failed to curb the yuan weakness. And so it is going to be quite a challenge for the premier to try to rein in the economy in terms of all the dysfunction that's happening across the state of leverage, the state of the property sector, the state of consumer confidence. And so I think this forum here that we have at BRICS is a chance to maybe take a step back, maybe showcase how China has allies, maybe expand that kind of grouping in the BRICS, and promote kind of a soft power that China's projecting.
Soft power will not stop outflows and may indeed, as you said, the dysfunction may stymie inflows. When you look at global flow to China from an EM perspective, where are we?
So global flows, I mean, this year we've seen about $100 billion worth of outflows from the Chinese bond markets. So outflows are still continuing. There was a little bit of an uptick in the summer, but that was fleeting. And there was a bit of an uptick earlier this year around the China reopening, and that faded as well. So people are very much concerned around the geopolitical context with which China's operating, and then the kind of the long-term structural challenges that China face that is going to be quite medium to long-term in nature, and that growth decline is curbing the investment appetite from a lot of investors.
And now one other major meeting which we understand or is reported to take place this week will be Xi alongside Narendra Modi. Now you have a vicarious risk trade that I can sort of lay out, which is long rupee, short yuan, which is almost the very personification of that geopolitical meaning. But stand up the trade for me in terms of the narrative, because it is about current account deficits and it is about fundamentals.
Yes, and it's about carry as well. So India's investment appeal has massively improved over the course of this year. It's an economy that's exceeded expectations on the growth front versus China, which has disappointed expectations. India is now being investment-led in terms of its recovery. So that's a really appealing investment thesis for a lot of investors. And then there are, yes, things around the carry structure, the kind of momentum that we see, especially in the bond market, where we think Indian bonds stand to benefit from the positive momentum that we see in Indian assets and the potential for inclusion into the large benchmark global bond indices. So that should encourage flows as well. So I think there are key differences around macro fundamentals in terms of how the growth outlook looks for India versus China, as well as the geopolitical context, where India is maybe a bit more balanced in its and more nuanced in its relationships with the Western partners, and less prone to the capital outflows that we might see out of China.
And part of that, part of the underpinning of this is also on the FX reserves. And this is something which I look at, for example, when I'm looking at Saudi Arabia and those FX reserves, et cetera, divesting of treasuries, mega projects going on there. But from the FX reserve point of view, it's also an underpinning of the long rupee on a broader FX dynamic, isn't it?
Yes, the Reserve Bank of India has been very cautious around trying to prevent massive levels of volatility in the rupee. And so they are there intervening on both sides of the equation, trying to prevent excessive weakness or strength and smoothing out the volatility. And that does help to instill a bit of confidence in the stability of the currency and its attractiveness as a funding asset.
We're constantly trying to understand what global weather patterns mean. I had the CEO for Dubai Airports here this morning. What does it mean for tourism? We have El Nino. I've had WhatsApp after WhatsApp from various groups about the longer term ramification. Within the dynamic of commodity pricing, when you look at the things like rice, etc., just talk me through the top level of the risk from El Nino, and to what extent does that play into how we should think about allocating?
Yeah, so I think the changes in global climate patterns is going to severely impact commodity prices over the coming years, decades. And in terms of I think that the key key implication is around the heightened volatility that we're likely to see out of commodities markets. The structure of the market is going to be still quite diversified and differentiated. And the things like base metals, things like oil prices, energy reserves, those are still going to be helped by the supply constraints that are implicit in the market. And so prices there can still be supported. I think also the food prices, agriculture prices, because those are so heavily influenced by weather patterns, and those weather patterns are becoming much more volatile, much more violent, those can also exert upward pressure on grains prices and all the components that are necessary to kind of the food basket in a lot of the EM countries. So overall, I think there is structurally still upward pressure on food prices, on commodity prices, and those are going to be notwithstanding the global slowdown that we're experiencing.
Yeah, I mean, just on the whole rates narrative, which will drive EM to DM, we are in this new zone, aren't we? We're debating about whether 10-year benchmarks in the States will get to 5%, whether the Fed has done enough. Neutral rate, where is the neutral rate? 200 basis points above inflation at the moment, which is where we are with real rates. When you look at the rates, the global rates landscape, where is EM to DM in terms of the narrative? And I suppose that's more on the debt side, on the bond side at the moment that I'm curious.
So the picture is really quite differentiated. So we've got like heat maps of the valuations picture that we map EM versus DM and how that's played out over the past 10 years as a benchmark. And we see that, for instance, LATAM bond markets, fixed income markets are offering very attractive levels relative to where they've been trading over the past 10 years, relative to the kind of real levels of yield that we've seen there. And so in those kinds of valuation metrics, LATAM markets, Mexico, Brazil, even though there have been lots of movements this year already, those still offer quite attractive valuations. On the other hand, places like Asia, those are not so attractive given how far yields have declined already in this kind of disinflation narrative now that we have in place, and the downward drift in yields over the past several years. So it's quite a mixed picture, but what does stand out is that there are pockets of value, especially out of LATAM, and now especially out of a few markets in the CE complex.
Okay, it's all about differentiating, not just in equities, but in the bonds and EM space as well. Phoenix, thank you so much for being my guest this morning. Phoenix Kalan, Head of Emerging Market Research at SocGen, as the BRICS leaders gather in Pretoria and across South Africa this week. Coming up on the show, we're going to take a look at the future of funding for women's football. We're joined by the CEO of Mercury 13, which has just launched a $100 million multi-club fund. Where to invest on Bloomberg. Good morning.
In 2018, the IPCC did what was called the 1.5 report. What was the difference between what a 2-degree world looked like and what a 1.5-degree world? And the catastrophe to the planet between those two poles led everybody to conclude that actually the job is bigger. We have to go to net zero. And that's a transformation of the global economy on the size and scale that's never occurred in human history. So that's a kind of daunting task, but it's full, I think, also of challenge, opportunity, the chance for innovation, and the chance to have the private sector play a fundamental role in making that change happen.
politics to the world of business. Every weekday at 5 p.m. Eastern Time, hosts Anne-Marie Hordern and Joe Matthew alongside Kaylee Lines deliver news, insight, and analysis live from Bloomberg's Washington headquarters. Get the latest from and about politics' biggest power players at the end of every trading day. Balance of Power, every weekday at 5 p.m. Eastern Time, only on Bloomberg, your global business authority.
Conversations that matter, the insights that you need right here on The Pulse. I'm Manus Cranny in Dubai. Well, the viewing figures show that Sunday's World Cup final set a new UK record for women's football matches, with an average of 13.3 million people watching the game. Spain's victory, of course, was hard to take for the Brits. As interest and money in the women's game grows, how will the funding of women's football clubs change? My next guest is launching a $100 million multi-club fund to buy controlling stakes in women's football clubs. It is Victoire Coevina Reynal, CEO of Mercury 13. Victoire, welcome to the show. Mercury 13, you're raising $100 million. Have you got there yet? And where's your first major multi-club target? Is it going to be Spain, UK, Italy? Where? Good morning.
Hello, Manus. Good morning, and thank you very much for having me. We are launching Mercury 13 today, and it's incredibly exciting, especially with what happened at the Women's World Cup. Our first target is here in England. We are not allowed to share the news just yet. We will later this week, but it's definitely a club that we're very passionate about and that has tremendous potential, and we're lucky that we're going to be working with them moving forward. Our second target, and this, I promise, was not planned, is in Spain. So we saw both our nations at the final, which was great for us.
Tell me this. You are now going to be in charge of capital. You will decide in part how wages are paid. The money differential is spectacular in the sport, isn't it? I mean, women paid $30,000 a game, the winning team $270,000. You know, male colleagues get $1 million for an Instagram posting. Will you lobby to raise wages actively and really raise wages in women's football?
Absolutely. I have done for the last 5 years of my career, so this is not going to change right now. Right now, there's also a commercial deal for it, right? There is really data that can back that it's a good business, and raising the wages is part of it and is very much justified. So we're going to be working on this 100%.
Given the viewing figures that we saw in the Australian semi-final, the women's final of Spain, England, what's it going to do to pricing pay-to-view women's football?
Well, we're going to see everything starting to rise, right? It's not only the broadcasting rights. It's not going to be only the commercial, deals that we're going to be seeing. But it's also understanding that women's football is bringing in a whole new audience into football that for the last 100 years we haven't seen, which are women. And to me, that is, $1 billion opportunity, if anything. Women, we control spending power in homes, as you know. And we are going to be able to now, as we are welcomed into the sports, to be a part of those decision makings, whether it's by taking our entire family to a stadium or traveling to watch a club and be a fan of it with everyone, in the household. It really poses an enormous commercial opportunity. And at Mercury 13, we were going to support our clubs with our stellar management team that, has been prepared to work on everything from the commercial to the financial to the on-pitch performance to make sure that we are capturing all of this opportunity and that we are accelerating our clubs' victories on and off the pitch.
You said that you've been an advocate of higher wages, remuneration, and deals for women for many years. So the money you lend, the money you give, will there be strings attached to that around remuneration for the girls on the pitch?
Absolutely. I mean, it's going to be a part of the financial model, right? This is a business at the end of the day. There's a lot of people that invest into women's football as a charity, as a form of charity. We're not looking at this as charity. Obviously, women's football is very clearly a gender equality movement, one more powerful than the Me Too movement, in my opinion. But at the end of the day, it is a business. We have investors and we need to create returns. And I think that actually making sure that we build that argument that women's football is an incredible investment asset will end up helping the whole industry at large. And so, increasing wages for players is just the beginning, but it needs to be in tandem with what they're doing off the pitch on the commercial and broadcasting rights. So it goes really hand in hand.
So let's just talk about the Lewes Football Club. It's fan-owned at the moment. What's going to happen to that model, if at all? I mean, can you just give us a sense? I know that you've got some challenges around this in discussing this, but what do you think the biggest fundamental change would be if, and I emphasize the word if, that deal comes to pass later in the week?
I'm really not at liberty, unfortunately, to discuss more about this, but I will say that with all of the investments that we're making, we're looking at strong operational teams that are existing, right? And clubs that need capital to move faster. Right now, women's football waits for no one. It's moving at the speed of light. I actually had a baby girl a few weeks ago, and I'm here. So clearly hasn't waited for absolutely anyone. And we need to make sure that we're capitalizing on this and making sure that we can grab the timing, get to the commercial side of things as fast as we can, and start, getting quick wins.
Victoire, we wish you well and well done on raising the funds and deploying them actively. We wish you well with whatever deals may come to pass. Victoire Correvina-Rehnal, CEO of Mercury 13. Women's football is on the up. Coming up, depositors are seeking out better returns on their savings. What does it mean for the U.S. regional and mid-sized banks? We discuss right here on Bloomberg. Good morning.
Solar energy, wind power, battery-operated cars. The transition from old to new energy forms has investors placing companies that need to dramatically curb greenhouse gas emissions, like power providers, and those that are in a position to dominate in clean energy. Brookfield hired former Bank of England Governor Mark Carney to strengthen its environmental, social, and governance investing. In March, Australian utility AGL Energy shot down Brookfield's takeover offer. The firm had aimed to accelerate AGL's transition to net zero emissions by over a decade. Carney signaled that this was no problem. He says Brookfield is reviewing at least 50 potential transactions across a range of industries.
Bloomberg UK, your source for news and analysis covering the biggest challenges facing the UK government, economy, financial services, and markets.
Tax cuts should not be the priority. It's about a credible plan for growth over the next 2-3 years.
In this post-Brexit world, how do you see actually servicing your clients?
It was disruptive, and it's going to have implications to how capital raising works.
Now we're having the perfect storm in the UK.
Watch Francine Lacqua Thursdays at 9:30 a.m. only on Bloomberg, your global business authority.
conversations that matter, the insights that you need on the pulse with me, Manus Cranny, in Dubai. Overnight, S&P Global have downgraded and cut their outlook for a slew of small and mid-sized U.S. banks. S&P says the clients move funds into accounts with higher interest rates elsewhere. Deposits decline in the banks. Quid pro quo. Squeeze on liquidity. Tom Metcalf is with me. You know, Tom, in 2007, in September 2007, there was a physical run on a bank. It's an image that will always be indelibly etched on my mind. It was Northern Rock. These kind of downgrades, are we inching towards another electronic moment of another disruption in flows? Good morning.
Hey, good morning. I mean, look, that's the big question, right, Manus? I think probably it's not really an existential crisis yet, but again, more bad news for these small and mid-sized US lenders. So the Co-Americas, the Key Corps, they're all being downgraded, and a few more kind of having their outlooks sort of cut by S&P. Comes after a Moody's move as well. I think, you know, there are these negative trends, and that is obviously not good for these smaller banks. But in terms of when you look at the broader banking systems, you know, I think those bigger banks are doing well, and that will probably sort of offer a bit of a buffer as well.
Where do you think the biggest pressure point is? I mean, if I'm looking up T-bill ETFs, you know, and looking for the ticker for that, I mean, that spells danger for everybody in the United States of America, because if I'm unleashed on an ETF, but that is the personification, that is the pressure point, isn't it, in terms of the flow?
Yeah, exactly. And, you know, as ever with these things, who's everyone looking at? Jay Powell. You know, he'll be speaking this week. And, you know, what the Fed does with its interest rates is really just going to dictate, you know, as you say, how bad this crisis gets, right? If they continue to rise, you know, that's when we might start asking those questions you posed at the start. Of course, if that kind of whole sort of backdrop eases a bit, then things are going to look a lot rosier for these banks.
And it's going to be a bit of a tight squeeze on some of these lenders. Do you think the worst is past, or just briefly a little bit more turbulence to come?
Yeah, I think probably a bit more turbulence. It feels like we're just kind of still in the midst of this. I remember us talking about this months ago, right? And I was sort of feeling this regional crisis didn't have too much longer to run. So I'm going to couch my bets and say, you know, there's still a bit further bad news ahead.
Oh, dim and gloom. That wasn't how I wanted it to end, Tom. Tom Metcalf there, our managing editor for finance in London. It could get a bit tricky as we go ahead. Pretoria is the destination for Xi Jinping to meet his host, which is Cyril Ramaphosa, the head of the BRICS gathering in South Africa. The flowers are out, the carpets are laid as they await the arrival of some of their biggest trading relationships onto the red carpet. Narendra Modi is said to meet with the Chinese Prime Minister, reportedly meeting with him later. This is BRICS writ large. What will the political and economic power and consequence be of BRICS? Kriti Gupta is up next from New York. We're along with Tom McKenzie in London with Surveillance, the early edition.
We're not going to be relying upon countries whose values we don't share.
To the world of business.
It's all about corporate power at the end.
Balance of Power, live from Bloomberg's Washington headquarters.
We couldn't be more excited what's in store for you.
How long will it take? How many years?
Why don't we take this one day at a time?
Good luck. Everybody has a perspective.
Every weekday at 5 p.m. Eastern Time. Join host Anne-Marie Hordern.
It's the one area, really, of bipartisanship.
Well, I think we're getting more of it.
That's optimistic.
And Joe Matthew.
The debt ceiling is looming. How close are we going to get to the line before you start to worry?
Alongside Kaylee
The
Langs,
door was open for regulators to do more, and that puts the Fed between a rock and a hard place.
as they deliver news
This is such an important economic issue.
He's no longer trying to run away from
That really blew some minds.
insight,
We can both invest in law enforcement and also make sure that communities feel safe in their own skin.
and analysis.
I think your audience will get this more than most. This is not the Republican Party that you know.
It allows him to do what he did so successfully in 2020, which is run against crazy.
From and about politics' biggest power players.
This was the zombie case, and it's now more than well alive.
That's for sure, with two more potentially to come.
I'm willing to have this battle.
It is vitally important.
This is the intersection of Washington and Wall Street.
Bringing people directly to the decision makers
Right.
that impact your investments and your life.
Balance of Power, every weekday at 5 p.m. Eastern, only on Bloomberg, your global business authority. The top names in business are on Bloomberg.
I think there is a case for 3% inflation going forward, plus or minus, and I think if we got to that point, then the Fed would begin to consider stopping and maybe even lowering rates over the next year or so. Chairman Powell is trying to replicate what Paul Volcker did, to slay the inflation dragon.
Nobody covers business like Bloomberg, your global business authority. Why do the biggest names in business choose Bloomberg?
That is a great question.
It's a great question.
Great question. Great question. That's a question I get all night.
Bloomberg, top experts, great questions. This
sell-off from spiraling. Bloomberg is live in Pretoria as South Africa's president hosts China's Xi Jinping ahead of the BRICS summit. Expansion, currency cooperation and food security are all on the agenda. And Microsoft submitting a new deal to UK regulators to get its Activision takeover across the line. The rare move follows a series of dramatic twists and turns in the deal's global regulatory battles. Welcome to Bloomberg Surveillance Early Edition. I'm Tom McKenzie, stepping in for Danny Berger here in London with Kriti Gupta in New York. And Kriti, there's a risk-on mood across these markets.
There is, and it's interesting. Even in the bond market, there's a risk-off mood. Some really interesting kind of cross-currents in the market right now. We'll start with the equity market, though, because, Tom, you're absolutely right. Green on the screen here, stateside, higher by 0.3%. A little bit of that global sentiment feeding in. Again, I'm going to reiterate, it is a summer Tuesday, so we are seeing light volume, but nevertheless, perhaps a sum of all parts trade, because we do have some individual stories that are perhaps moving that sentiment forward. For our radio audience, 44.26 on those futures contracts. But the bond market, as promised, is really where I want to hone in. The 10-year yield, 4.31. And remember, yesterday it closed at the highest level in about 14 years. So you are seeing a little bit of a pullback when it hits those kind of record levels. 431 down about 2 basis points right now. Really not in line with the global bond story, because take a look at what's happening in Japan. The Japanese 10-year yield actually higher, and it had hit its highest in about, I think, a 9-year high overnight. So again, you are seeing the JGB story continue to see some upward pressure as the BOJ really stands put on how they're going to be dealing with inflation. And speaking of inflation, let's go in the opposite direction and talk about perhaps deflation or disinflation. Pick your poison, if you will. Dollar yuan now seeing its strongest fixing overnight on record. So as people kind of try to flood out of the yuan, pull out of China because of that data you're seeing in the property sector, but also from the Chinese consumer as well, it looks like the PBOC continues to step in. Nevertheless, dollar yuan at about 730. Stronger for the greenback right now, higher by 0.2%, Tom.
Yeah, Chris, it's interesting that you highlight what's happening with the yuan, because you did see in the equity space in China mainland and in Hong Kong this kind of late session surge as well, and question marks from some traders over in that part of the world as to whether the national team, the big state-backed funds, have gone in to buy up some of the stocks there. You saw about a 2% gain on the HSI over in Hong Kong in the matter of minutes. But that optimism has followed through into the session here in Europe. You're seeing gains of close to 1%. It's the tech story as well. The lift coming through, of course, from the optimism in the US that lifted Nvidia and other big tech names yesterday, and that continues to lift the sentiment here in Europe. The main tech benchmark here in Europe then gaining a full 2% is the chip makers. It's the likes of ASML over in the Netherlands with that very sophisticated play on lithography machines that are doing really, really well. And again, tying that to the Nvidia story and, of course, ARM and its listing story. Euro dollar currently just slightly stronger on softer dollar, 109 on the single currency. Kriti.
Certainly something we're keeping an eye on. Let's really expand with the Chinese story, though. Escalating its defense of the yuan, as you just mentioned, setting a new record with a stronger than expected reference rate for the currency. Joining us now is Bloomberg's Jill Desis. Jill, walk us through how to read what's going on with the PBOC, specifically the stronger fixing. Is this strengthening the yuan or managing a decline? At what point do people just say, look, there's too much intervention, we don't want exposure?
Hey, Kriti. Yeah, I think that at this point you're looking at these stronger than expected fixings over and over again, where we've also seen some other tactics that the PBOC that China has taken in recent days to try to prop up the yuan. I mean, honestly, it does feel like at this point it's really about managing that decline, really about managing that depreciation. I mean, this is something that we've heard from the central bank time and again. We just saw this in their quarterly monetary policy report that was released last week. They're trying to guard the yuan against any sort of excessive movements. I mean, they've made that clear in the past, but yes, I mean, when you're looking at what's happening in the economy, the slowdown, a lot of that bearish sentiment movement there, that's a big part of the story. But I also just want to point out, it's really not just about the economic activity. There's a lot more at play here. I mean, remember, this is also about interest rate differentials. We're seeing China cut interest rates and sort of prop up their economy at a time when the rest of the world, other major economies really aren't doing that. You're dealing especially with widening gaps between the U.S. and China. There's not a whole lot of reason for foreigners right now to put all of their money into yuan-denominated assets. So I think that that's another part of the equation here too. But yeah, at this point, really sort of about managing that depreciation.
Yeah, and managing the downside for the yuan is just one tool, as you know, Jill, that they have at their disposal. What other measures could policymakers in Beijing be reaching for?
Well, I mean, I think that at this point, there's a lot of different things that they've already kind of tapped into. Part of that was about guidance for state banks. I think that, the PBOC, even in their policy report, as I mentioned that they said last week, they do have additional tools. But ultimately, one thing that I want to bring us back to here, Tom, is that this does still kind of seem like a bit like a crisis of confidence, right? That's something that we've been talking about for several weeks now. There's just a lot of weakness in sentiment right here. I'll just point to one thing that I'm looking out for, regardless of whatever the PBOC is planning, whatever they're doing, is there's still plenty of economic data to come. I know that I just said earlier that economic data is only part of the story, but it is an important part of the story. I mean, I'm looking ahead, for example, about a week from now, we're going to get the latest PMI data out of China. I think that might weigh on some sentiment here and kind of tell us what the PBOC and others might have to do to guide things forward as we wait to see whether sentiment is just going to weaken further.
Okay, Bloomberg's Jill Desis on what to watch for out of China then after that record fix coming through from the PBOC. Jill, thank you. On China, sticking with China in the corporate space, this has a dual listing in Hong Kong and in the US, of course. Baidu coming through with second quarter revenues of 34 billion yuan, just coming in slightly above the estimates of 33 billion yuan. A bit of a touch point, of course, in terms of the strength of the US consumer, the Chinese consumer, I should say, with advertising revenues, but also it is certainly part of China's AI play as well, Baidu. So interesting in that context. Let's get more on the geopolitics, though, of the China story. Xi Jinping, of course, the president, is in South Africa for the BRICS summit, where they will be discussing enlarging the group and increasing local currency trade. Joining us now on the ground is Bloomberg's Jennifer Dabasaja. Jen, how are we expecting this meeting to unfold between the two presidents?
Yeah, Tom, well, I can tell you, being on the ground here, we just wrapped up a 21-gun salute. We heard the national anthem from both China and South Africa. And the presidents are now meeting. Xi Jinping has arrived here. And as you mentioned, this is coming for a big week for South Africa, but a really big week for both of these nations, considering BRICS is happening. And yet, this is the only state visit that we are seeing. And, reading into that, we can just take a look at sort of the importance of the relationship to these two countries. China and South Africa are celebrating their 25th year of diplomatic relations, and they're both very important to one another. South Africa is China's biggest trading partner on the African continent and has been for the past 13 years. And on the reverse, China is one of the biggest investors and a very important investor to this economy here in South Africa. So we're anticipating the leaders to talk about how they can deepen that relationship, maybe explore more partnerships, and even sort of, enhance their voice as leaders of the global South on the international stage. And so they're meeting just above me here just for a few hours before heading back to Johannesburg to begin discussions around the BRICS Summit.
Jen, let's talk about the market read-through here, because I think what a lot of people kind of found interesting is just how much of talk there is about de-dollarizing, something that a lot of different countries say, but then ultimately kind of abandon, just given the strength of the greenback and the fact that it is literally everywhere. Jen, what is the conversation on the ground in terms of de-dollarizing? How seriously should an American audience take that?
Well, Kriti, it's interesting you mentioned that, because just this morning we heard from South Africa's Deputy President Paul Mashatile talking about this specifically and saying that this week the plan is to talk about how to reduce the reliance on the dollar. Tom mentioned there that, of course, on the agenda is how to trade more in their local currencies. But we've heard a number of leaders over the past few weeks talking about, this is not just a world this is not just a world like it was back in 1940. This is a multipolar world, and therefore a lot of these countries who make up the BRICS and potentially who could come into the BRICS need to have another means of benefiting from this economic bloc. So it's definitely going to be on the agenda. Whether or not there's going to be some sort of statement about a joint currency is unclear, but we heard from the Deputy President today that it is definitely something that they will be discussing.
Jen Zabasaj, I think we can hear some military parade or drum beats in the background there as this meeting between the two presidents continues on the ground for us. There you go, just above Jen. Live on the ground for us in Pretoria, covering the BRICS Summit. Thank you, Jen. Now, switching focus, SoftBank's ARM has filed for an IPO on the NASDAQ, taking a step toward what is set to become the biggest US IPO of the year. Let's get the latest from Bloomberg's Alex Webb. Alex, what did we learn then around ARM's listing about its ambitions?
Well, they are very much trying to position this as an AI play. Of course, we've seen the huge bidding up of NVIDIA and to a lesser extent AMD this year, partly because, almost exclusively because they have very compelling AI offerings. ARM is trying to say that it does, but crucially we see in the middle of this, their earnings in the most recent quarter actually fell from a year ago. Their earnings in the most recent fiscal year also fell. If they really were at the forefront of the AI revolution, one might expect a slightly different story. So there's a certain tension in the middle of that.
Let's go from tech story to tech story if we can, Alex. One of my favorite stories, I'm going to say of the year, I'm going to call it, Microsoft's $69 billion Activision Blizzard has got a new chance of potentially winning approval from UK regulators. We know this has been a major sticking point, comes after the tech giant submitted an amended deal to the antitrust watchdog. Bloomberg Radio spoke with the CMA chief executive, Sarah Cardell, earlier.
We had a real concern previously that Microsoft would be able to control the way that market was going to develop. What we see with this new deal, and we will have to test it carefully through our review, but what we see from the announcement today is that rather than Microsoft being able to control how those cloud streaming rights are used, that control will shift to an independent company.
Sarah Cardell there, the CEO of the UK CMA. Alex, the expansion of this kind of remedy is pretty interesting here. We know the CMA doesn't like things like licensing deals, and yet it does feel like Microsoft is giving them just that when it comes to Ubisoft. Square these for us.
I mean, look, if you listen to her, the mood music certainly seems to have changed. She seems, it sounded like she was quite optimistic on the deal's prospects. She said in that interview that their objection had been that Microsoft might have a dominant and controlling position in this developing cloud gaming business, this would seem to assuage that. I think you've got to look at the context here, which is very much that it had been approved on a European level. It had been ultimately approved on a US level, although the regulator had tried to block it, but a court ultimately greenlit the deal. The UK was picking a slightly different issue, this cloud gaming thing. In the US, it had been just about gaming more broadly. This gives an opportunity to save a little bit of face for the CMA, while also letting Microsoft do this deal, which may not really be about cloud gaming. There are other rationales for it. So it's a healthy compromise for a lot of the parties involved.
Okay, a healthy compromise, and we're seeing pre-market those two stocks then, Activision and Microsoft, gaining modestly on the back of that news. Bloomberg's Alex Webb with the details on that CMA change around Microsoft Activision. Coming up, we are tracking European natural gas prices, as Woodside Energy CEO says the company is having, quote, constructive discussions with its workers who are threatening to strike. Really important for the European gas complex and energy complex. More on that next. And later this hour, we're going to catch up with Simon French, Panmure Gordon, head of research, get his views on the Fed, the UK, and the trajectory for growth and inflation. Stay with us. This is Bloomberg.
We're investing in a lot of different capabilities and features that makes the in-store shopping experience that much easier, that much more compelling, whether it's price check, browsing inventory in this store, so that we can really make that experience as convenient and as simple as possible.
Convenient, simple, that's sort of what people have needed in the age of COVID. Is that here to stay, or do we go back when finally we all hope that the pandemic will be behind us in some way? Do our changing shopping habits go back again?
What's really interesting about retail in my 20-plus experience is that convenience never reverts itself. Now, the form of convenience has shifted, whereas, say, in 2000 to 2010, a lot of convenience was driven by more stores nearby. Now it's stores in addition to digital. Yeah. There's nothing closer than the phone in your hand.
On the next episode of The Circuit. It's still almost shocking how new you still are to this sort of being famous thing.
When I do, go out and people are like crying, that's when sometimes I'm, whoa, why? There's no rule book for it.
Watch The Circuit with Emily Chang, Thursdays, 10 p.m. Eastern on Bloomberg Television, or 8 p.m. Eastern on Bloomberg.com or the Bloomberg app on connected TVs.
Making good progress on the discussions. We're engaging constructively. We're listening and trying to really understand the areas of concern that our workers have. And I think the meetings are going well. So we will just continue to engage in a constructive and respectful manner.
Woodside Energy Group, Megan O'Neill there, speaking earlier on Bloomberg Television. This comes after labor disputes in Australia triggered a spike in those natural gas prices. Bloomberg's Stefan Stepczynski joins us now. He is all over this story. Stefan, talk to us about the trade here, first of all. We know these strikes have been going on. We know there's volatility in the LNG market. What else is driving the trade?
Yeah, so I think that the main thing to focus on is that Europe is far more dependent on LNG now than they were last year when they were importing a lot of gas from Russia. Since the war in Ukraine, they've had to really replace a lot of that with LNG imports rising 60%. Some of the other factors are other supply disruptions. While the strikes in Australia haven't started yet, there's a lot of focus on other potential supply issues out of maybe the United States with hurricanes. There are ongoing maintenance in Norway. And as well as all of that, you're also looking at demand. You know, one of the reasons why gas prices in Europe have dropped from record high levels, about 90% from this time last year, is due in part to the basic demand destruction across Europe and industries there. European demand has not rebounded back to normal levels and has remained subdued over the last year despite the drop in prices, and that's really helped curb it. One last thing to really look at in Europe is inventories. Gas inventories in Europe are above 90% full. That's the highest level for this time of year ever, and higher than the target that they were hoping to hit by November. So all those things combined paint a complicated picture, but right now the focus is on supply. If supply gets hit, whether it be strikes in Australia or other places, you could see gas prices continue to rise in that trend that we've seen over the last few weeks.
Okay, so that's a really good overview of the supply-demand dynamics when it comes to gas. More broadly across the commodity structure, the energy structure and commodities, China, of course, a major role in terms of that demand picture. Stephen, BHP then reporting its lowest annual profit in 3 years in terms of the corporate impact. The CEO warning that the outlook for China was uncertain as the nation, of course, grapples with this crisis in construction. Take a listen.
There's obviously policies in place that are meant to stimulate new starts, but they're not translating as effectively into changes on the ground as certainly we were anticipating, and I think some others were anticipating as well. So that's really what we're keeping an eye on over the next 3 to 6 months.
Stephen, how does that demand out of China translate into gains or not for oil? How is it playing into the oil picture?
You know, I think one thing in the oil picture that, at least if you were talking to me around this time in January, I think there was a big view that Chinese oil demand was going to be the big story, was going to be the big bullish boost. You know, they're going to be removing those COVID restrictions. You could see even some government stimulus. You're going to see people driving again. You're going to see travel. You're going to see the refiners really buying up a lot of oil globally. And there was this view, this bullish view in the market. And I think a lot of that has, to a degree, sort of evaporated. Chinese oil demand, yes, it has recovered from last year's levels. And you have seen quite a bit of purchases. But while you're not really seeing it go into, you know, refining, you're seeing a lot of that go into inventories. You're not seeing the really strong oil demand that I think a lot of people were expecting last year. And because of that, it is putting a bearish sort of element into the oil market. I think oil prices moving forward, it's much more, again, like gas, a supply story where you have OPEC Plus cutting their output, and that is tightening the market for the second half of the year. And that's kind of pushing the market forward and up over the last few weeks.
Okay, Stephen Stupczynski with the latest on the energy markets, the gas market, of course, those potential strikes in Australia and the demand coming out of China for oil as well. Thank you. Coming up, Charles Schwab's plan to cut jobs and offices for a $500 million, $500 million cost reduction. We get the details on that next. This is Bloomberg.
Names in business are on Bloomberg.
I think there is a case for 3% inflation going forward, plus or minus, and I think if we got to that point, then the Fed would begin to consider stopping and maybe even lowering rates over the next year or so. Chairman Powell is trying to replicate what Paul Volcker did to slay the inflation dragon.
Nobody covers business like Bloomberg. your global business authority.
Sports and money, they've always gone together.
But never before have sports been so massively influential and as lucrative as they are today.
NFL, NBA, none of them were what they are today when they were born.
There's leagues that are being thought of and built every day.
New teams, new leagues, new business models, even entirely new sports.
I never in a million years would have thought this is what my life would be like.
We set out to find what's happening and what's about to happen at the nexus of business, sports, and culture.
Getting involved from a business perspective was something that was very natural and an easy transition for me.
From the pickleball courts of Arizona
to the kabaddi tournaments in India
to the cornhole boards at your local tailgate. This is what's next in sports.
Politics to the world of business. Every weekday at 5 p.m. Eastern Time, hosts Anne-Marie Hordern and Joe Matthew alongside Kaylee Lines deliver news, insight, and analysis live from Bloomberg's Washington headquarters. Get the latest from and about politics' biggest power players at the end of every trading day. Balance of Power, every weekday at 5 p.m. Eastern Time, only on Bloomberg, your global business authority.
This is Bloomberg Surveillance, the early edition. I'm Kriti Gupta in New York with Tom McKenzie in London. Let's get to some of the stories that caught our eye this morning. Susquehanna co-founder Jeff Yass joined investors Boaz Weinstein, Bill Ackman, and Mark Lazary to bid for hedge fund manager Sculptor Capital. That's according to Bloomberg reporting. Sculptor said in a filing on Monday that the firm received multiple takeover bids, a story we're certainly monitoring very closely. Let's stick with the Wall Street theme here and talk about Charles Schwab planning a $500 million cost-cutting measure. The company responding to investor pressure. Schwab saying in a filing on Monday as well that it will cut headcount and close down or downsize some of its offices. Shares down about 0.3% this morning. And sticking again with the labor theme, a different story over at American Airlines. The carrier's pilots have now approved a new contract that will provide 46% in cumulative pay increases and retirement contributions over its 4-year term. This marks the most expensive labor contract on record for a U.S. airline. The pilots voted 73% in favor of ratification, according to the union. Tom, this is a story that I feel very passionate about. Of course, we've been monitoring the labor story globally, but specifically in the United States, from Hollywood to Detroit to the Teamsters negotiations. Of course, airlines are no different. And the key takeaway of this particular deal is if you look at the 5 major airlines, it really spans the gambit. United and American seem to have negotiated the biggest pay rises. American, as I just said, the record. But then you have the likes of Southwest, for example, which haven't been able to broker a deal, are actively fighting in court right now to get rid of the federal mediation as well. So it's not all clear in the airline space, but definitely all clear for American Airlines.
And what's clear in this negotiation is that pilots have leverage at this point, and they are using it, at least in this case. And why not? Historically, of course, in the last decade or so, the pay for pilots, I was stunned at how low it was, these men and women who are flying us around. So on one level, it's reassuring that they're getting a better compensation package as they continue their jobs. But it's interesting, the labour dynamics as well. We're going to be speaking, of course, to Simon French from Panmure Gordon next, and he's talking about the fact that wage negotiations, the unions make up about 9% of the labour force, and how that plays into the mix as well as we look again at monitoring the health and the strength of the labour market in the US and those increased wages and how that factors into inflation and the Fed's fight. Simon French coming up then, Panmure Gordon, head of research. His views as we look ahead to Jay Powell, of course, that speech in Jackson Hole. And he's also, of course, always excellent on the UK. The stickiness of core inflation here, the challenge for the Bank of England as markets price in potentially 6% terminal rate from the Bank of England. Today, money moving into gilts and yields are lower. Stay with us. This is Bloomberg.
venture capital. It's been volatile. From bank crisis anxiety to AI exuberance, Caroline Hyde and Ed Ludlow chat with the biggest names about the latest tech trends.
Is AI going to dominate the earnings narrative for this sector this week?
I think we're seeing opportunity and potential platform shift that we haven't seen in a long time.
If you're a company today and you're not embracing the changes that are taking place with AI, you're going to be behind.
How do you prove to the investor base that you haven't just tacked on AI to make yourself sexy?
It's very hard to differentiate if you're not experienced with AI.
The startup stories.
We think this is a watershed moment for technology.
Certain categories are more exciting than others. Right now, obviously, generative AI is a category that is very exciting to startup founders, customers, and venture capitalists as well.
So what we are seeing is a new area of opportunities for new founders to come and change the industries that matter.
And the real talk on realistic valuations.
Some of the best opportunities are sitting right in front of us.
How do you discern which ones are good on the marketplace right now?
I think founders have woken up to the reality that taking on more money at higher terms doesn't necessarily play to their benefit in the long run.
How do you actually invest?
Follow the VC money on Bloomberg Technology, the only daily business show dedicated to tech right in the middle of the trading action. 12 p.m. on the East Coast, 9 a.m. in the West, only on Bloomberg Television.
From New York City,
in London, in Sydney,
from Washington,
in Tokyo,
9 a.m. in Beijing and Shanghai.
Good morning, everyone.
Have a great evening.
Here's what I'm watching.
You do not want to miss this story.
He's there, the kind of upside.
When U.S. jobs numbers are released, Bloomberg brings you crucial data at terminal speed and instant expert analysis. Nobody covers jobs day like Bloomberg.
This is Bloomberg Surveillance, the early edition. Here's what you need to know. Doubling down, China ramps up the fight with yuan bears on two fronts to stop the sell-off from spiraling. And Bloomberg is live in Pretoria as South Africa's president hosts China's Xi Jinping ahead of the BRICS summit. Expansion, currency, cooperation, even food security, all on the agenda. And Microsoft submits a new deal to UK regulators to get its Activision takeover across the line. The rare move follows a series of dramatic twists and turns in the deal's global regulatory battles. I'm Kriti Gupta in New York with Tom McKenzie, stepping in for Danny Berger in London. Tom, if you are an avid watcher of the show, which I imagine you are, you will know that Danny and I love to talk about the Microsoft Activision deal. It has driven markets in the past. It's given the weighting of Microsoft, but it's not really the trade today, is it?
It's not, but what a fascinating development. And whether or not this actually spells a win for regulators here in the UK, or if it's a bit of a fudge so that both sides can avoid losing too much face. But it's a really interesting twist to that story. You are seeing optimism filter through these European markets then. There's the lift, of course, coming through from the gains, particularly led by tech in the States. And then the Asian session performed quite well. And you had this late surge in Chinese shares as well. And whether or not those state-backed funds are coming in to buy up some of the stocks there remains a question, and we're delving into that, our team certainly over in China. The tech play is in force today. As a sector, that is lifting the European benchmark. You're seeing gains of a little over 2%, and it's the chip makers that are at the top of the pile, including the likes of ASML, listed in the Netherlands. Euro-dollar currently at 109, bit flat. You're seeing some money moving into gilts as well, yields coming off, a bit of a catch-up maybe to the move lower in yields that we saw at the start of the session after the run-up, of course, stateside yesterday.
Yeah, green on the screen in Europe, well, green on the screen in the States as well. And I think you really are seeing a carryover from that sentiment. Despite sentiment in China and the rest of Asia not as positive as we were really seeing in the rest of the world. S&P futures higher by 0.4%. Again, the outperformance in the tech space really driving that 44.27 for our radio audience on those contracts. But again, let's bring it back to the bond market because, Tom, you just talked about the move in the UK bond space. Well, you're seeing a little bit of diverging dynamics when it comes to the U.S. and Japan specifically. You are seeing the U.S. 10-year yield close, by the way, at over 10-year highs as of yesterday's session. So you are seeing a little bit of a pullback from those levels. I believe 435 was that level then, about 431 on the 10-year yield right now, down about 2 basis points. But over in Asia, a completely different story, Tom, where, of course, you are seeing JGBs push higher and higher when you look at the yield picture there, putting a little bit more pressure on a BOJ that says, no, we're going to stick to what we are thinking here, especially that yield curve control policy. At what point, though, do you start start to see it filter, I think, more strongly into the yen that is circling around, I think, 145 at the moment versus the dollar. Dollar yuan, though, is really where the story is, because you were starting to see the strongest overnight fixing on record coming out of China. Again, as people really have this kind of head for the gates mentality when it comes to not just Chinese stocks, but I think specifically bonds and FX, it looks like the PBOC is stepping in. So 730 on that currency pair, Tom.
Yeah, and it's a yield differential between, of course, Chinese sovereign bonds and US Treasuries that is part of the play there as well in terms of the pressure on the yuan. And talking of which, Christy, sell-off, of course, in those Treasuries, as you marked there, pausing then after that 10-year yield hit a 16-year high yesterday. Investors, of course, betting on interest rates staying elevated. Let's bring in at this point Simon French, Chief Economist and Head of Research at Panmure Gordon. So my question to you, Simon, is to what extent are the markets doing the job for the Fed at this point?
I think it's a really good observation, actually, because if you go back to the dot plot given over by the Fed back in June, the bond market didn't really believe the Fed at that point. And actually, there was something of a softening of financial conditions, which was inconsistent with both the dot plot and the associated narrative about the idea of financial conditions having to remain pretty restrictive for a prolonged period of time to squeeze out core inflation. What's interesting over the last 30 days is how much their bond market has slightly capitulated to the Fed. We always talk about the bond market being the smart money. Well, actually, have the FOMC rather convinced, with a combination of some of the stronger macroeconomic data out of the United States, that actually their reading of the economy was rather better than the market's reading of the economy midsummer.
Do you think Jay Powell does a victory lap on Friday in terms of the soft landing scenario, or does he leave the door open for further hikes? And what do rates at these levels mean for your forecast for the US economy, stretching out, pushing out to 2024?
Yeah, so I don't think he'll do a victory lap. I think there have been too many mistakes on the way up. You know, there's still criticism that allowing inflation to rip, putting the terminology of transitory inflation, which, although we have come back down, and most people would argue that it was largely, at least at a global level, a supply-side phenomenon that has unwound and looks to be unwinding pretty smoothly back towards, let's call it low single digits rather than 2%, because I think there's an important distinction to make there. What does that mean for the United States economy? Well, I think tighter financial conditions actually starts to lean into the kind of momentum that we're seeing in the real-time GDP indicators for the third quarter. But into 24 and 25, and maybe you're about to ask me about some of the payroll numbers, some of the uncertainty there, I think a lot hinges on how much latent capacity there is still in the US jobs market. I wrote a note about 18 months ago now that suggested the US economy could add more than 10 million jobs before it started to be inflationary. Wow. We're about 8 million through that journey, potentially still got 2 million more to add, but is a big uncertainty on how structurally, based on an aging US labor force, how much can be squeezed out without pushing up that core inflation that, of course, would certainly stop Jay Powell doing a victory lap at this point, although he may defer that victory lap until the data comes in a bit more robust at the start of next year.
Simon, something tells me Jay Powell isn't the victory lap kind of guy, but talk to us about what that metric of success actually is. It felt like for a while it was indeed the labor market, but if the labor market really falls apart, really starts to collapse under kind of perhaps delayed pressure, are we in kind of a Volcker era? Would we start to see that same kind of, I don't want to say hatred, but hatred towards Jay Powell? Is the labor market still the metric of success for the Fed?
Well, it's still certainly the political metric that Jay Powell needs to be very mindful of. And I note that former US President Donald Trump last week was pretty critical of the reappointment of Jay Powell. And I think going into the period of time when whatever path the US economy takes from here, it'll run into the political dynamics of the presidential election. And the idea that the delayed impulse from tighter financial conditions starts to feed into labor market outcomes, the real wage outcomes that US electors are going to consider going into the next presidential election. I think that's going to be something really important in terms of the metrics that not just Jay Powell, but the whole FOMC are going to have to talk about. They don't want to be only talking about the inflation part of the dual mandate. I think heading into a presidential election, if anything, the dual mandate favors more narrative about what maximum employment looks like.
But if we talk about the employment story, I'm just wondering how you actually model some of the labor negotiations that are happening across the country. I mean, sure, when you look at it from, say, middle class or upper class jobs, it's a much easier thing to put into numbers. When you look at the negotiations happening in Detroit right now, or in Hollywood, or even, I would argue, in Silicon Valley, how do you factor that in to the success, again, of the Fed?
Well, this is about expectations for inflation, but also, and I think we have to be mindful of looking through how prices in the labour market are set, not just through this extraordinary period post the COVID pandemic, but actually look at it in the context of the last decade, most of which the last decade we've been faced by stubbornly low wage growth, stubbornly low core inflation. And one of the dynamics there that we've got to be really mindful of is that if workers are taking their, if you like, their price-setting behaviour from the overall price level, not the tightness of the labour market, the stuff that they're going to be talking about at Jackson Hole this week about whether the modelling that underpins a lot of central bank thinking actually works through the cycle is very, very salient to that US wage setting.
Simon, you've been interrupted by SpaceX. Elon Musk is getting in the way of your commentary on inflation. But here we have SpaceX and the launch of Falcon 9. Launching of 21 Starlink satellites. These are live pictures coming from California from this launch to low Earth orbit, again from the Space Launch Complex at the Vandenberg Space Force Base in California. This is the 15th flight, apparently, for the first stage booster that is supporting this mission. So again, it's part of the Starlink process of putting these satellites into low Earth orbit and building out that connectivity. Of course, Starlink has been consequential, we know, on the ground in Ukraine, but further beyond that as well. This is a major business that is proving very successful so far, of course, for SpaceX. Following, by the way, the stage separation, the first stage is set to land on the, here we go, Of Course I Still Love You drone ship in the Pacific. These reusable stages, Simon like that. Of Course I Still Love You drone ship. And we are watching the live pictures still, of course, taking off then from Vandenberg's Space Force Base. It's always pretty impressive, isn't it, Critty, to watch these pictures. It's becoming routine for SpaceX, and in part, that is part of the miracle, part of the genius of SpaceX, that they have made this routine.
Yeah, and I would argue, first off, for our radio and TV audience, we're looking at live pictures here, and Tom did not just make that up. One of those Pacific stations are indeed called the, of course, I Still Love You docking point. But let's talk a little bit about kind of the geopolitics that are associated with this. We know Starlink satellites have come under scrutiny from the likes of China, from their role in potentially the war in Ukraine as well. And sticking with that theme, let's bring you some even more headlines that we are getting. The U.S. Commerce Secretary Gina Raimondo due to visit China next week. She will be the fourth Biden envoy to be visiting China since June. She follows, of course, Anthony Blinken, the Secretary of State, Janet Yellen, the Secretary of the Treasury, and John Kerry, our climate envoy from the Biden administration. It looks like the trip to Beijing and Shanghai are due to take place from August 27th to August 30th. And of course, we know Gina Raimondo has been very vocal about the chip story at a time when Japan and South Korea were recently hosted over at the White House. We will bring you those developments as we get them throughout the next couple of hours and of course, the next couple of weeks as well. Coming up next, China is escalating its defense of the yuan against the bears as the currency remains under pressure. We're going to dive into the U.S. read-through. Stick with us. This is Bloomberg.
For the first, call it 18 years at Chipotle, this was you come into Chipotle along the line, you interact with the crew, and you customize your meal. We've got this separate make line, and it's digitized, and so the orders come in, and they're really kind of staged so that if you say at noon, I want to come in at 1 o'clock, we hold that order, and we will send it to the crew like maybe 10 to 1.
Right.
So it's ready right when you pull up your car.
how do you manage these kind of two different staffing needs, right? And
Yes.
making sure you have the right amount of people
Yes.
at the right time.
We spend a lot of time projecting sales. A lot of it is, it's part art, part science. We're trying to bring more science and more AI into it. Because if you get the right sales projection, then you know exactly what your staffing needs to be. So if you get the sales right, you can get the entire restaurant